Can you guys hear me now?
Yes, fam.
What is going on, man? Yo, I apologize, guys. Oh my gosh, I keep muting myself on my Yeti mic. I'm thinking that the flashing red light means I'm talking. I guess the light on solid is on. Okay. Price coming down here with speed is essentially where I'm going to be looking to find a short opportunity where I'm seeing the market structure shift, especially after taking buy side liquidity and running down so fast. Because there's institutions stepping into here and then bringing price quickly below here. They want to bring price lower. But what is most retail traders going to do? They're most likely going to see the drop and then they're going to continue to think the drop is going to immediately take effect. That may not be the case sometimes, but you may need to wait for price to return into an old low or the speed. And as you can see, price returns into the speed. Does run past it because we know candles cut through zones all the time. Doesn't necessarily need to be a perfect quote unquote retail support and resistance. It will cut through prices. It cuts through it. But I'm still telling myself that price is still going to go shorter. And I have a stop loss for a reason, and I'm using proper risk management. We'll speed it up. Now, on the way down, what would I be looking for? I would be looking for price to run through swing lows with speed. I want to see when price gets real close to this, or after it starts accumulating, I want to see it break down. I don't want to see it start running quicker to the upside. I want to see it break down, chasing lows, because there's sell side liquidity below all these lows here. Gets really close to the stop. Might have been stopped off a margin, right? Could have been stopped off a margin. And as you can see, price finds its way back down to these swing lows. And look at the speed that they're running the swing lows with. It's intentional. It's not by accident. Look at how fast, when they get to this low here, look how fast they run through it with speed, killing all of this. And what does price do once again? It runs back into the speed. Right here to here. It's the same thing. Yes, it comes above it. It will happen. That happens at times. It's not going to be perfect. You can see price comes above it. And then as soon as it wants to drop again, it starts breaking down. Look at how the price action is breaking down. Slowly breaking down. Until it finally gives a little last push up. And all the buyers are getting overly optimistic again. And what are they doing? They're drawing trend lines. Like I said in the video, they're drawing trend lines. They're thinking, this is a trend line. Bitcoin's gonna test this and then run higher, but it breaks down, and then people draw another trend line. They're gonna say, oh, it's still going long. It's still going long, Deontay. There's another trend line here, and they're gonna draw any way they want. This has no metric. Come on, I'm drawing this trend line any way I want, at any angle, any degrees. There's no real measure behind that. And we know price action is only dealing with real metrics. Swing highs, swing lows, and speed. That's it. That's the only thing that price action cares about. Look at the speed that it runs through it with. That's the first one here. And look at the second one. Right here. Look at the speed. They're showing you that they want to go short. But look at how they pull it into the range. Now, we don't know per se if they're going to fill the entire range. Because as you can see for this one here, they filled the entire range and then some. For this one as well, they filled the entire range and then some. This one, they didn't even hardly fill 50% of this range. Not even close. They fill a small portion, a quarter of this, and then they dump it once more. Because what are people doing? Trendlining it. They're going here. It just found some support again. It's going to bounce off of some type of support zone. And it's going to run higher again. And you have people arguing with you in the chats. Saying, Bitcoin's going to make another leg higher. But it all started from this. Telling me that Bitcoin was going to break down. Overall, with other confluences, I knew that the US dollar, because this is quoted from the quoted pair is the US dollar and the base pair is Bitcoin. I know the US dollar is strong. Everybody wants fiat currency right now. If you haven't looked outside or you haven't checked the news, look at what's going on globally. Economically, things are not looking well. People do not want risk assets. This is what I was trying to say in the channel. People don't want risk assets. Why would anybody want Bitcoin to try and pay their mortgage? Bitcoin's not paying my mortgage. Bitcoin is not paying my car note. Bitcoin is not paying my life insurance policy every month. It's not doing that. It's not paying my dental. It's not paying my bills, my credit card bill. It's not doing that. I need to liquidate. I need to sell my Bitcoin for actual cash now. I've invested all my money into stocks. What do I have to do if I need cash? I need to sell my positions. I need to take some off of my stock portfolio. And people are selling Bitcoin. They're dumping Bitcoin because people need cash. And where are they putting their money into? Most likely US dollar. The world reserve currency. I didn't set it up that way. Blame the financial institutions that the US dollar is a financial world currency. But we know that the US dollar holds a lot of value. And you can see how it just drops through all the sell side liquidity. Drops all the way through. More speed. What's this? Is this not more speed to the downside? All this is speed. It's telling you that it wants to go lower. Now, where can it be going? I want you guys to take a look at this. Because this is IPTA. On the daily. This is the IPTA data range for March. Buy side liquidity above this high here. This is an old high. This is an old high. Look at how price runs through this old high. Right? Sweeps that. What is this right here? What is that telling you? Speed. And this is the daily time frame. This is why I like the daily time frame. It's pretty obvious to see where the higher time frame trend is going. Here to here. Look at the speed. Once again, they pull price back into the speed. They dump because they can't hide themselves. And when I'm saying them, I'm talking about the commercial speculators. The retail traders, tiny specks of liquidity. We don't even see them. I'm retail. Doesn't matter how many fund accounts people get. Doesn't matter how large their live account is. They're still small specks. Commercial speculators have deep pockets, man. They run so deep. They can hold positions longer than me and you. Whenever we click buy and we click sell, that does nothing to the market. When the commercials buy and sell, we see things like that. A large candle. And we'll run it back right when we get that speed. You can see small cycle, large cycle. So there's a lot of confluences here going on. Because the market is not just one dimensional. It's multi-dimensional. A lot of things are going on. It's a lot of moving parts. Like Larry Williams says, the natural range cycle to the market is either small or large. We see how there's a small candle here. Look how the next day we get a large range candle. This day told you tomorrow you better go hunting because you're going to probably catch a big one, right? You're going to catch a big fish or whatever it is that you're hunting. You're going to catch a big one. You catch it and look at all the speed dropping down here. A large candle. Now, after this candle, what is most likely going to occur? Small. A small range cycle may kick back in. You know why? Because they got retail traders chasing price. That's why. They most likely have retail traders chasing price. Not to say the next daily candle won't be large or won't be as large as this current candle. But all I know is that eventually the market is going to give me small candles like this. To what? Reaccumulate orders again. To rebuild sentiment on the public eye. The public is blindly going to be disinterested when there is a small range candle. Small candles are not enticing. They're boring to people. When people see these small candles, they're bored. They're like, the market was trash today. I didn't make no money today. But when they see this, you see this large candle, they're like, wow, people made money today. You didn't make money though, because you missed the move. You missed the boat. By the time you looked at your MT4 or you looked at your TradingView chart and you saw this candle already finished printing, most of the times you're going to be psychologically geared to want to trade. You're going to want to chase price because you know that, oh wow, there's an opportunity that I could have gotten into the market and make money. Or now you think that there's another opportunity for you to make money. But what happens the next day? The next day, candle does open up here, right? eventually shoots up here. Let's say you held the trade. You might have gotten lucky, but there are definitely some traders here that held this trade too long and it pulled all the way back down and closed here. And then now they think the market is against them. Right? They think, oh, they're going against me on purpose. And then the next day it runs away. You're like, oh man, I could have sworn it was going to go higher. But it doesn't happen immediately sometimes. Like I said, same thing that I'm showing you here is the same thing that's happening on this side of the N in February. Look at the speed. Look at the shift. Put this here. And we'll make it red. That's fine. Look at that swing high. Look at the speed through the swing high. Look at the busy. Buy side imbalance, sell side inefficiency. The algorithm is inefficient in filling sell side liquidity while running up. That's all it is. And what does the algorithm do? It comes back into it a bit. Now, you don't know per se if it's going to run into the whole thing, right? The full range, 50% of it, or just the top of it. But you can use other confluences. You can use breakers. You can use mitigations. You can use fair value gaps. You can use liquidity voids, volume imbalances, other things that could probably tell you, okay, odds are it's not going to fill the whole thing. But you can see how small, look how small this candle is compared to the previous one. They stalled it up. They get all the retail traders buying and chasing price while they're selling and taking profits off of the day that they already sponsored their buys at a cheaper price. They already bought their net longs at a cheaper price, at a cheaper ticket. You're just now seeing it on the chart and unfolding. Then they take profit above a high, right? They break swing highs. They get out of it. They make their money over here. They bag the money and then they get out. And then what do? They reaccumulate orders again. Retail traders are trying to go long here, but they're losing. They're losing because they're getting in long at the wrong time. Price then comes into the speed area and then runs higher once more. That's what we have here going into March. Swing low. Swing low. There's multiple swing lows here, so you could say they're relatively equal lows. We'll draw this out here. We'll fade this a little bit so we can see it. Fade that. And we'll make it blue. Should be using my mouse. Speed down. What do? They get everybody chasing price, right? Because when people see this, they're enticed, right? It's like a dog that just saw the owner pull out its favorite toy, or it just showed it food or something. It starts salivating. It starts getting stimulated. It starts wagging its tail, starts barking, it starts jumping up and down, running back and forth. That's what this candle does to the public eye. Then you see all the news headlines come out. Oh, Bitcoin just fell from so-and-so. And then everybody and their mother is going to go, oh, it's time for me to go short on Bitcoin. And what did they do the next day? They stall it on you. They stall price on you the next day. I thought Bitcoin was supposed to dump. I thought Bitcoin was supposed to keep doing this. With speed, too. I thought it was supposed to give another large candle, another large candle, another large candle. No, doesn't do that. Doesn't do that. It works in cycles. The most natural cycle is large to small. It's very easy to see this. Large, small. Now tomorrow after this small candle, you should be looking for a hunting setup. You already know it's going to go short because of the fingerprint. They just showed you the fingerprint. They showed you their hand. Right? The master showed you the hand of where they're most likely going to push price. Now with IPTA, like I said, IPTA is just a tool. Not saying it's always going to be magical every single month. It's going to give you a better opportunity to see where the open float is, or where there is going to be sell side liquidity, or where the higher time frame orders are residing. We know it's residing below this, and this. We can already tell this is a liquidity void. Look at how price runs all the way up. All up candles. No breaks at all. All gas. Straight up. No gas at all. No breaks. All gas. This small range candle here is going to eventually lead you to a large range cycle. The whole point of it is you want to be in the market before the large candle forms. That's how you get the bigger pips. That's how you get those dynamic, explosive moves. This is not explosive. All these candles are not explosive. But eventually, If you're trading, you're going to catch something like that. You're going to catch something like this. Because you know that these small candles are getting smaller and smaller and smaller for a reason. They're just waiting to unwind and let it fly. That's what they're doing here. So you play this forward. Small, another small candle. Yes. It's not going to be an immediate large candle. Some days it will give that opportunity. It's going to be small, large, large, small. It's going to keep going back and forth. But sometimes it's going to take a couple days. And it's going to happen on a certain day. Like I said, Monday, Tuesday, and Wednesday are normally your most optimal days of trading for the week. You could say Thursday, but let's cut Thursday and Friday completely out and Sunday out. Monday, Tuesday, and Wednesday, your best days to trade. Play this forward. Thursday happened to be the large range candle. But the high of the week probably came by on Tuesday or Monday. See, Monday's here. Tuesday, Wednesday, Thursday, and it drops. And it runs through what? The sell side liquidity. That's the 40-day low. No, that's actually a 60-day low. Is that? No, it's the 40-day low. The 40-day low, the 60-day low, and potentially, could we be reaching down here for the 60-day low as well? Yes, we can. If dollar is still strong, if dollar's going up, Bitcoin's going down. They're selling Bitcoin. They don't want risk assets. This is a risk. It's a liability. My rate of return is decreasing because of the increasing interest rates. Dollar and fiat currencies, whether it's dollar or euro dollars, whether that's British pound, Aussie dollar, New Zealand dollar, Canadian dollar, Mexican peso, in any of these other paper currencies, it's going to be more likely to be invested in. The yields are increasing. If yields are increasing because the Feds or the BOJ, not BOJ, because BOJ still has negative rates, but if these central banks around the world are increasing their interest rates to combat inflation, Bitcoin is going to struggle. Stocks are going to struggle. It may not be they have a straight decline, but they may have a period of accumulation or a period of where they don't have real growth for a long period of time. Analysts are saying that stocks are not going to have real growth. Tech stocks are not going to have real growth until probably 2024 or maybe even 2025 because of what's going on in the world. Bitcoin may not see no real growth until a couple years later. Right now, Bitcoin is not going to be the hot topic right now of where central bank traders are wanting to put their money. That's how I was able to predict that sell off for, where is it at? Right here, for Bitcoin. And it's the same thing for ETH. It's no different for ETH because they're correlated as well. We jump down to ETH. Look at that. The same setup. Crumbled. It crumbled. And everybody was saying crypto was going to make another leg higher. Why would crypto make another leg higher in today's age? When everything was all nice and sweet, when the world economy was flowing and there was real money flowing around, even the money that we trade with now currently, these paper dollars that they keep printing, when real money was actually flowing before they printed all the money, right? The Federal Reserve, before they printed trillions of dollars and inflated the market, people were investing into Bitcoin. They were taking their money and buying Bitcoin. Right now, they're not taking their money and buying Bitcoin, like I said. People are getting laid off. People are losing jobs. People are walking into business establishments and walking out unemployed. Now, what do you think they're going to do for cash? If they have one Bitcoin, if they have two Bitcoin, they have 3 ETHs, 5 ETH, whatever the number is, they're going to sell a portion of their ETH. They're going to sell a portion of their Bitcoin because they need cash. They don't have a job. I'm not saying that's everyone's reality, but the people that maybe have invested into these risk assets, they're going to sell a portion of their portfolio to make back up for the cash that they need short term till they find a new job, till things get better, till the economy starts moving in a way where they can now start taking their money and allocating it to risk assets again, putting it back into Bitcoin, putting it back into ETH, putting it back into Apple, Amazon, Tesla, Microsoft, Google. When they can start putting their money back, now is not the time that people are putting money into stocks. Yes, it is advised to buy at cheaper prices, but who's worrying about that when they can't make their mortgage payment? They need somewhere to live, so they're going to liquidate. That's what's happening. They're liquidating their positions. Like I said before, it's the same setup. Bring this back. Where's the fingerprint here? It's right here. That's the fingerprint. That's the ICT ATM model right there. Price has a short-term high, makes a short-term low, runs a short-term high, and then runs through that short-term low that it created with speed. You see the speed there? Here and here. I'm going to hide this. We're going to put this somewhere else. Hide. There's the speed. There's your fingerprint. But what's the storyline? Got to think about it in the means of liquidity. Buy side, sell side. That's the storyline. When I say storyline, I'm talking about where are they coming from? They're coming from above equal highs. They run up here and they run price quickly to the downside, leaving this small pocket of price here. A SIBI, a fair value gap, a sell side imbalance. It's an imbalance to the downside, and it's a buy side inefficiency. It's inefficient in filling buy side because it was dropping that fast with speed. They just showed you their cards. They showed you their hand. There it is. And then when you play price forward, not to say it's going to be perfect all the time, but they already showed you their hand that they're most likely going to take this lower. And all they're doing is accumulating orders, getting people to think that it's going to buy. What are they doing here when it's going like this? What does this look like? This is a great example, man. This is a great example. I'm not sure if you're familiar with it. What retail pattern does that look like? That's a bull flag. Do you see that? You see that retail pattern right there? What's this? Right? That's the pole, whatever they would call it. And then this is your flag, right? That's the flag. Look at that retail logic there. I'm not gonna try and draw it perfectly, but that's it. That's the bull flag. And what is expected out of this retail logic? Price comes up, comes down, and makes another leg higher. Does that happen? Nope. They get smoked. Retail gets smoked once again. Cooked. And look at all the speed to the downside. Look at how many times they keep showing their hand. But the overall trend, because some people may say, oh, but what about the speed to the upside, Deontay? What about this? It's a great question. What about this, Deontay? Is the overall trend bullish? No, it's not. Does the daily time frame or the weekly or the monthly or even the yearly tell you that prices are probably going lower for the year? Or is the monthly chart telling you that prices are going down for the month? Is the daily telling you that? Is the weekly telling you that? If so, this is nothing but a fake move on retail traders. And look at how they stall price. Like I said, they stall price out right here. Look at how they stall that. Accumulating. They're building in what? Market sentiment. That's all it is. Accumulation. They're building in market sentiment. Pulling price up, down, up, down, up, down, up, down, up, down. And then finally they're like, all right, we give up. We're just going to show you guys where we're going. And they finally let it go. All the orders are booked. They gathered enough buy side liquidity that they wanted, and they drop price back down. And they do this, and it's rinse and repeat. Rinse and repeat. Another area of speed. Zoom out so we can actually see it. It's rinse and repeat over and over and over again. Comes back above it. Happens. Not going to be perfect. Nothing is truly real support or truly real resistance. It's going to run through candles. It's going to run through zones. But it's not I want to be specific here. It's not a random zone that I'm drawing on my chart. Right? When you see those channels and they're showing you, okay, look, man, this is they're randomly coming here. Oh, okay, this is support, right? They're drawing their box like this big. They're drawing it like this. All right, this is all support. How do they know that's all support? Or, I mean, resistance, sorry. How did they know that? There's no metric behind that. You just drew a random box in a measure of space. But there's a metric behind the points that I'm specifically trying to take. This is my point of interest. And you can see there was a reaction here. Price comes up, it breaks down, right? And where does it break down? It breaks down right into what? Sell side. What happens when sell side liquidity is taken? There might be a potential opportunity for buy side to come back into play. and they want to run equal highs. You see how they take the sell side? And look at this. Because some people may say, oh, this is a BPR. Yeah, in essence, it is. There's a fair value gap here, and there's a fair value gap on the other side, right? So this area is a balanced price range. Price comes down into the balanced price range, and it runs higher. Yes, there is no speed breaking a swing high here. Might be on the lower time frame, because I'm only showing it on the hourly. But you can see how there is speed here. Price comes down into the speed. Draw it out. We'll make it red. Price comes down into the speed, accumulates, and then finally runs back up to do what? Probably take out some type of high. Runs up, takes out a high, and then it comes back down. Comes back down because it booked all its profits up here again. And what is it doing? All of this is accumulation again. They're reaccumulating orders, getting everybody to think, oh, wow, ETH is finally breaking out to the upside. And then what do? They upset retail traders. They dump it again. Zoom out. They dump it again. Now, I'm no crypto expert or master, right? I don't trade crypto. But it's sound logic because all these markets are manipulated the same way. Doesn't matter what it is. Doesn't matter if you're looking at EJ, GJ, ETH versus US dollar, Bitcoin versus US dollar, whatever it is, Dogecoin, whatever you want to look at, it's all manipulated. This is not decentralized. There's somebody that moves the price action, right? If a true entity owns enough of the actual liquidity, or they own the most of the Bitcoin or most of the Ethereum, isn't it not decentralized? And isn't it not controlled? Because if they sell and they own most of all the coins, isn't it not going to reflect in the price action? Yes. That is logical. But if I own only one Bitcoin or one ETH and I sell, you think tomorrow Bitcoin and ETH is going to drop? No, it's not. It's not going to go anywhere. But people can't comprehend that idea that they don't control the price action. And they get too overly optimistic about the setup. Look at how they stall this for days. Look at how they stall this. Sideways price action. Like I said, I don't trade crypto. I trade foreign currencies. But look at how they stall this for a couple days, man. Look at that. That's making people lose their mind, right? Psychologically, what are retail traders thinking? Man, yo, if it gets above this like high in this consolidation, man, it's a breakout. Man, if it gets below this low here, it's a breakout. That's what they're making traders think. And that's what at least I think. Because when I put my shoes as a retail trader, even though I don't look at myself as a retail trader, I try to think of myself as the market maker. If I was the one controlling this price action, how would I get in to get the best price possible and liquidate everyone's orders? That's how I like to look at the market. I don't ever think small. I think big. I'm not a kitten. I'm a lion. I'm not a sheep. I'm a wolf. I'm trying to hunt. I'm trying to feed my family. That's what's going on here. They're hunting. Until they what? Finally say, okay, it's time to dump it again. And they dump it again. And you're not going to catch the dump unless something over here tells you to go short. Odds are most people are not going to see that. Short term at least. Some people may not see why this would sell off here. But some people will look at this price action and say, oh yes, it's going lower. I'm going to go short. And they're going to catch that. But on the flip side, there's going to be a loser. Because when this price drops, there's a buyer, right? Because that means if it's selling, think about this. It's a counterparty. It's two hands in this market, buyers and sellers. If they are selling, that means there was a willing participant to buy the order off of them. Think about that. And they're only playing with themselves at this point. The commercials are only buying and selling from themselves. It's just transactions. That means someone was willing to pay ETH at a higher price here. And someone sold ETH to them at this price. And they're willing to pay that higher price ticket. They brought at a higher price, and that person sold and made profit. It's all transactional. It's all business at the end of the day. It's the same way when you go to your grocery store, when these supermarkets or your retail stores or these clothing stores or whatever store it is, when they're buying things overseas and getting it cheap, or from exports to this next and the third, right? Wholesale and bulk sale and stuff like that. They're buying cheap. And then what are they doing? They're pricing it when they put it in the shelves for you to buy as the consumer. That's what's going on in this market. It's no different. Don't think about it as some new playing field or something new. No, it's business. It is all business. I could go on and on about this, but it's all business. That's all that's happening here. And then if you bring it back down to IPTA, the levels are showing itself. Sell side liquidity. If I do the same thing with ETH, it's probably going to look similar. Let's look at the, not AMC, trash stocks. Meta, trash. Meta is way ahead of its time. But that's a discussion for another time. DXY. We'll jump into DXY and talk about what's going on currently. So yes, non-farm payroll was this Friday. Market was all moving up and down, up and down. Seek and destroy week. We can see now, price came up for March. Took out what? 20-day high. Took out as well the 40-day high. Also took out the 60-day high. Now, if you are familiar, I posted this a while ago. This is accumulate. When I was looking at it before February came around, I saw this as accumulation, manipulation January, February distribution. Now, I'm not sure if I have that post anywhere, and I know I have it somewhere here. We'll run it back real quick. Right, it's got it somewhere up here. It's another great example up there. So many great examples. If you just go through my trading view profile, there's some good examples of some things that I'm talking about there. What year is this? 2022? Yeah, this is good. Somewhere around here. $2022. Bear with me, guys. I'm sorry. Oh, it's 2023. Too far. It's the beginning of the year, so I started to think about this. And I will answer all the questions that people have towards the end. There it is. DXY thoughts. I said, hello traders, January 24th, 2023. Do you see AMD? December moving sideways, January moving outside of the sideways price section, and February may be a run to the high of the accumulation. Buy side liquidity, sell side liquidity. And this is all higher time frame ideology, right? It's all fractal. It's showing itself here. Even though it happens on a lower time frame, you can look at this as Asian session, London session, New York session distribution, right? Or London kind of distribution going into New York continuation, retracement continuation higher. And then London close reversal. And that's what I was expecting here. You can see manipulations going on in January. January is the month that they're trying to probably get traders on the wrong side of the yearly open. So the opening price for the yearly open, you can see here, they pull all the traders in long. The first week of the year, everyone's going long on dollar. But what happens? It turns around really quick. And now they bring price below the yearly open at a cheaper price. That's all they're doing. They're buying it cheap. They're buying everything back cheap. And then they're going to make you buy expensive. They want you to buy at expensive prices. That's all they're doing. They want you to buy high. And they want you to sell low. But on the flip side, they're buying low and they're selling high. But retail's doing inverse. They're doing inverse. What happens? They buy cheap. They buy cheap. They buy cheap. While retail is going to look at this and say, oh, I'm probably going to also buy cheap, buy expensive. And then what do? They liquidate everybody and probably sell it back down until they're ready to bring it back up higher. The opening price for March, it's the same thing. Premium above, discount below. Anything below discount is a high probability buy scenario. Now, when I'm looking at this market right now, I see reaccumulation, right? Price comes down, takes out swing lows. It's killing swing lows, taking out sell side liquidity. Now, does this mean price action is going to continue because it did this and go down? That's all up for time to tell. But it's up to me and you as the trader to use the tools that you may have at your hands to speculate whether or not DXY is going to keep dropping or keep rallying. Same thing for GU and UJ and gold. Because that's what I've been showing you guys in the channel so far. But I know some people look at like Bitcoin, so I've been trying to jump into the cryptocurrencies to at least show that these models work on all asset classes. And that's what I'm seeing for DXY. Price comes up in a premium and it sells after taking out all the IPTA days high. After getting back to the primary accumulation high. That was the start of December. Remember, buy side was here and sell side was below here. This was the manipulation phase, distribution, And could this be like London close when you get a reversal? It could be. It could be. It could be the London close. 10 a.m. to 12 p.m. when it makes the high of the day intraday, and then it sells back down into the range. That could be a potential. Now, looking at this chart, I would take a fib, and I would take all the swing points that I have. I would take the largest one that I currently see. This one. This one. Premium discount. Right? Premium discount. If this range is true, and this is what they're really basing everything off of, from this leg high to low, then they're probably going to be looking for some buy opportunity close to equilibrium or below equilibrium. Because there are times where price gets down to equilibrium of a range, high to low, and then it runs higher. And there's times where it runs to equilibrium and lower, down below into the blue section, discount, and then it runs higher. This all looks like probably a phantom trend line, right? This here, because retail traders are probably trying to draw some type of trend line. Right? If I was a retail trader and I had to draw a trend line, that's how I would draw it. Some people may be more professional in drawing trend lines than me, but that's how I would have drawn it, right? It's going to run the sell side below these lows. It's going to want to sweep below these lows. You can even see this. There's a PDA right here. There goes your volume imbalance, right? Because what did price do here? It opened with a gap first. Because when this candle finished closed, this candle opened here with a gap. And there was no body here at one point in time. There was no price action. There was no algorithmic fill here. At one point in time, there was no algorithmic fill. There was no wick here when the candle opened. Eventually, it comes back into fill that zone. You can see it fills it with the wick. And then it drops down lower. Is that a fingerprint telling us that they want to bring dollar lower? Potentially. Now let's look at GU. Let me do GU first. Inverse is happening here, as you can see. Now with the daily updates I've been showing you guys, I've been saying GU is going to be bearish seasonally for March. And if you take a look at here, see here March, January was bullish, February was down, March was down. So I'm using some type of macro analytic to help me here. So I'm using macro data to give me some perspective of what I probably want to see here occurring. And we did get that sell-off here. But then NFP came around, Seek and Destroy week, came back up and pushed price right through this fair value gap that I was saying, the speed down, right? You also have what? A balanced price range here on the daily time frame. The fact that it's occurring on a higher time frame makes it more significant. This is not a 5-minute fair value gap. This is not a 1-minute, 3-minute fair value gap. This is a daily fair value gap. There's significance here. There is something occurring here by the institutions to allow them to push the daily candle, the daily range back up here, back to these highs. My overall suspicion was these equal highs, what I wanted to see start off for the month. Because if I had it my way, like I said, if I was the market maker and I had it my way, I wanted price to do this for the month. I wanted price to come up, take out all these clean highs. It could even reach for this one, but mainly this double top here. Right? I want people to buy into that because it gets retail traders on the wrong time. When they see the double tops, they like to buy it. Right? They like to buy that. They want to buy it. I want them to buy it and push price up into that so that I could then go short on them and bring it back down here. That doesn't happen. Sometimes I don't get the bias right and price action does otherwise. And I just have to recalibrate, have to re-speculate and see, okay, what has price given me? I may have gotten the trade wrong for the day. It's okay. But because I risked properly, I risked 1%, or I lowered my risk because I now took a losing trade, and I lowered the risk by 0.5% until I could gain that percent back. Then I can add back on the full 1%, then the full 1.5%, then the full 2% I can add back on. But traders are doing what? They're risking 2% per trade. If you're doing that for longevity, you're going to lose money. You're going to blow your account. You're going to lose more than 50% of your equity within the next 2 months, next 3 weeks, or even less than that in a day. You blow all that. But if you have proper risk management, you're able to trade longer than other traders. It's a marathon, not a sprint. You're not going to get into this market becoming rich in one day. Yes, anybody can hit a home run. I want you to know that. You can get into this market tomorrow. Get a funded account. Let's say you go through the trials and tribulations. You get the funded account. You get the 200K account, and then you hit a home run, and you get a nice payout. Cool. You got 1 month of payout. Great. Now, next month, you think you're probably going to keep doing that? No, because you don't have the true discipline and characteristics of a long-term trader. You're going to have a short trading career, or you're going to have an abrupt trading career. You're going to have a short-term trading career because you don't have the discipline to be a safe trader. These prop firms don't want traders that are risky. They want traders that are serious about their business model. And if you're going to do risky behavior trades, you're going to risk 3%, 5% every single day. Eventually, you're going to lose your account. Or eventually, they're going to say, yo, my boy, time to pack it up. We don't want you here no more. You're a risky trader. And that happens. A lot of people violate the terms and conditions for a lot of these prop firms. Price comes down, instead it takes out the sell side liquidity, it runs higher. With that being said, and I see the speed now, because if you play it forward, small, large, medium, small, large, look how large that is, small, another large candle, and then, like I said, sometimes you will get another large candle. But hypothetically, I would want to wait for a small candle like this, then get in the market. It's night and day. Price comes up here and shows a quick reaction down. Does this mean price is going to continue to run up higher to this? Possibly. I would have to wait for further price action to make better judgment, because what I see right now is a balanced price range. A fair value gap down, and we'll get rid of this because I know I don't like messy charts. Fair value gap down, fair value gap up. This could potentially be another fair value gap. If the daily candle opens here and then runs higher, all this is a balanced price range. And then what can this look like? Accumulation, right? All of this. In the midway of February, accumulating orders. March is probably the manipulation phase, right? There's many ways to look at it. It's all dependent on what you want to. Manipulation phase. They get all the retail traders to go short again. And then they run it back up to distribute higher. Back up into what? The double top, right? The 40-day high here, the 60-day high here, the 20-day high here, and even these swing highs here, and these clean highs here. Let's jump into UJ. UJ takes what? The 20-day high. Going into March in a premium. High probability sell setup. Price comes up, sells to the downside. But do I see any institutional fingerprints right now? I do not. Besides the one on the left side of the chart, which was this one. This is that. And where are we now? We're cutting through it, right? We're getting below it. Does this mean price is going to continue going higher because it ran up with speed, came down, came up, came down, and went higher? Potentially. But if it doesn't go any higher, how could you look at this as a certain metric? You could then turn into that retail logic. If this fair value gap is not being respected every time price is trading down into it, right? And it's stalling around it, right? It keeps stalling around this fair value gap. Isn't that probably telling you that it's probably going to break down? Yeah, it's probably going to break down. It's threading the needle multiple times to just fall lower. And I'll show an example on the lower time frame about what I mean about that around the Asian session model. There was a good example I would like to show you guys. But look at how this fair value gap is tapped multiple times. If they truly wanted price to leave this area, wouldn't they do it with speed? Yes or no? Yeah, they would. They would want to do it with speed. If they want price to leave this area, they would do it with speed and do it with the quickness. They wouldn't hesitate. It would be dynamic. It would be snappy. There are times where, like, look at this one down here. This is another example. Look at the one right here. 1 time, 2 time, 3 time, 4 time. Gone. It's gone. But look at the candles and look at where the bodies are residing. It's coming inside of it and respecting it, right? Look at this body of this candle. It's far gone below it. So could this be insight telling us that, okay, yen is probably getting a little stronger. Yields are coming back. The 2-year note yield, the 5-year, the 30-year, the 10-year is probably getting weaker. and dollar is getting weaker, and yen is probably going to get stronger. So that would reflect into a sell signal for UJ. Could price come back down and test this as your classic retail resistance? Yes, that does happen. It happens often. How do I know it happens often? There's one example looking at you in the chart. Hopefully you can see it before I draw it up. I'll take one time. It's here. It's right here. Look at this one here. See that speed to the downside? Look at how they use it again. And there's other confluence inside of it. There's another one here. Right there. That fair value gap, because if this, like I said, if this market was going to keep going down, why would they keep holding price in here for this long? Look at it. Let's bring it back. Hopefully the gears are ticking and turning when I'm saying these things. Hopefully you guys are comprehending this. I'm trying to make it as simple as possible. Speed to the downside, it breaks the swing low, right? Like I said, oh, that's the fingerprint right there. Boom. Swing low broken with speed. Breaks this one too as well. That's the fair value gap, the SIBI. Sell side imbalance, buy side inefficiency. Comes in there, wicks off of it. But you want to see this run now. It should be explosive. It should be explosive. It shouldn't stall. It should come in, gone, get out of there, you know? Cut the corner, turn. But what does it do instead? It stalls. Trades all up inside of it. After a while, you're probably going to tell yourself, wow, this thing is just taking too long to leave this area of speed. I thought the institutions wanted this to go short. Odds are they probably don't want it to go short anymore. They changed their mind. And then you get another fingerprint to the upside. And what do? They run this up, and now they're using this as quote-unquote retail support. And it's supporting price to go higher. Because that's where all the large orders are residing. All in this area right here. They've accumulated orders. Look at how small these daily candles are. And I'm not talking about the wicks. Don't worry about the wicks. We're talking about the actual bodies of the candle. Look at how small these candles are inside this range. They're accumulating orders. Because if it was dynamic, they would hit it and give you a large body candle down. They have not gave us any large body candles down. So it's all up to you to probably decide whether or not, okay, this thing is really not moving. Look at this one here. It moved. This one moved. Another example. So many examples on this chart. This is great. Speed breaks a swing low, trades into it. Eventually, we're getting large candles out of that zone. Large candle. It's larger than this one. 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 It's larger than the last 4 or 5. It's larger than the last, basically almost week. Last 5 days. 1, 2, 3, 4, 5. Yeah, 5 candles. All these candles. This one candle here starts it off. Because look at how large it is. Large. And these are all just counter trend candles because they showed you their hand. They want it to go lower. This is them just retracing price. This entire leg up. Let me not say leg and confuse people. This entire accumulation back up, this retracement back up, is them positioning themselves and increasing or gathering net short positions. That's all they're doing here. If it's a downtrend, all these up close candles are just them selling each time. They sold on this day, they sold on this day, they sold here, they sold here. And then you finally saw the full effect of all the selling that they built up. There it goes. There we go. Another large candle. This one's larger than this one. And this one is larger than the last week. So there's signs of it probably going lower. And it shows another footprint. Look at the fair value gap. Look at the bearish order block, right? Price breaks its swing low. Where did it fall from? This last up close candle here. Price comes down, up into the bearish order block, and then runs lower. Taking out what? The low that it originally created. That's all it's doing. It's transactional. And what are they doing? They're buying below the swing low again. Look at what happens on the right side of the chart. Let me draw that out again. Here, here. Sell side liquidity swept right there. What happens here? They're buying cheap. How do we know they're buying cheap? There's many ways to look at this. Where's the opening price for January? Where is it at? Where's January? Right. Yeah, this is the opening price. That blue line. I'll make it larger and just dot it out. Yeah, I'll make it dark. Make it black. Anything below this price point is discount for the monthly candle. That's the low for January. And then they push it back up. They slowly start pushing it back up. Same thing here for February. That's the opening price for February. Look how they get everybody to go short. And they push it back up. Because the whole time, they're buying it cheap. Below what? A old swing low. They just reaccumulated orders right down there. And then they finally push it back up. Now bring it back to current price, where we are now. So this is probably telling me, right, the fact that we closed outside of the fair value gap that was supposed to get us to this 60-day high. We just left a premium range. We just left above March's opening price. So is this them getting retail traders to buy UJ, buy dollar, and then they're selling? Yeah, that could be a case scenario here. A step further. What's the most recent leg that we have? We have this one. Where are we now, right now in price? Premium. Expensive. This is where they want everybody else to buy. Right? In this zone, this red zone, they want everybody to buy here. But on the flip side, they're selling it. While we're buying it from them, they're selling it to us. Isn't that foolish? Why would we want to buy at higher prices? That doesn't make sense. You want to buy at cheaper prices down here. Right? Where there's accumulation, right? Another area of consolidation, returning back to a point of interest, and then probably giving price another bounce up higher. They just want to buy it cheap again from us. Because what are we going to do? We're going to wait for price to get down here, and we're going to sell. And the hand switch again. We're selling it back to them at a lower price. They're like, wow, you're selling UJ back to me at a cheaper price? Wow, this is a discount. Thank you. Thank you for doing me a service. And what happens? Price flies right back up, and people lose money. That's what happens. Not saying that's what's going to happen here on this chart. I don't want people to get it confused. I'm telling you what UJ is going to do. But I'm telling you that's how the market is primarily working day in, day out, month after month, year after year. Before we were even born, the markets were doing this. Same thing. Oh, we did GU. What else do we have? Do we have gold up here? We don't have gold. We're going to run through it together. And then we're going to get into the intraday, weekly recap, and then I'll get into some questions. This is how I'm doing the IPTA. So I'm coming back. Everybody should at least, I think, be familiar with how I run it down. Taking exactly what ICT told me. Coming to the first of the month. And I'm coming back 20 days. Got it. From that, another 20 days. Which would be technically 40 days from March 1st. Another 20 days, which would be technically 60 days. I don't want to confuse anybody. Because you're like, oh, you're not doing it the same. Once I have that, I'm looking for my highest high and lowest low. I'll do the cast for it too. I'll answer some questions here as I'm going along. Why am I doing it this way? People ask me. They ask me, why is Deontay picking the first month and then looking back and then casting forward? Because I chose to. Simple answer. Because Deontay wants to do it that way. Now, I know ICT shows people you can take any day of the week and look back 20, 40, 60 days. You can do that. You have a moving IPTA range, right? IPTA is just showing you what you have to work with. I'm using what I have to work with this. There's no special case scenario. I want people to understand this. If you go through his content, there's no special case scenario where you have to specifically only use the first of the month or your current trading price. It's all up to you as a trader. You have the autonomy to do that. You have the freedom to choose whatever model you want to use that you see feasible. Just because you see Deontay Forensic Forex doing it this way doesn't mean it's the right way. Deontay found something that he likes doing it this way, so he's going to continue doing that. That's all I've been doing. I don't want to get anybody confused about why I'm only picking this one way. I could be doing this the IPTA that moves every single day with me and looking back 20 days. Even if I were to do that, I want you guys to know it's not going to be a big difference. People think it's a big difference. If I pick the March 2nd instead and did look back 20 days, odds are I'm still going to have the same data to work with. It's not a big drastic difference. It's not. It's going to be the same 40 days, 60 days, 20 days. It's probably going to be the same. You're just going to have a different day. It's going to be shifted up one day. That's it. But I still have data. You still have data to work with. There's no difference. I preferably like to start at the first of the month because ICT happened to show me a model that way, and I stuck with it ever since then. There's so many models he shows. There's 12 of them. There's more than 12, actually. There's more than 12 market maker models. You think I'm using each 12 of them? I'm not. Deontay is not using all 12. I'm only taking piece of this, piece of this, piece of this, piece of this, and I create my own algorithm. I create my own ideology with all these other concepts from Larry Williams, from ICT, from other traders that I probably learned from over the years. Just pulling these concepts together and making my own trading model. That's all you have to do. Formulate a trading model that works for you and your schedule and your personality. That's it. Simple. Don't overthink it. It takes time to curate that, though. It took me a couple years to understand what I like and don't like. I don't trade off of breakers. I don't trade off for balanced price range. I don't use central bank dealers range. I don't use Asian standard deviations anymore. I don't do those things because Deontay just doesn't find it feasible. But I know that my homie or my pal Aaron may love that. You know, my good homie Julian may like bullish order blocks, or they might like mitigation blocks, or whatever the case may be. They have a different system compared to my system. Most of the times, you only see me talking about fair value gaps. You clearly can tell that Deontay likes fair value gaps. There's not a lot of times you hear me talking about breakers, mitigations, and all these other concepts because I don't need all of them. ICT said it himself. He said you don't need to use all of the PD arrays that he's given. Use the ones that your eyes can specifically see. I know this. I was on a Zoom with a young lady, and she was showing me breakers a lot of the times. And I was like, oh, crap. I didn't even see that. But she just likes to see the breakers. My good friend Aaron sees the balanced price range a lot of the times. I don't see that. Yeah, it may be obvious for him, but for me, it may not be too obvious. But for me, it's obvious to see the speed and the fair value gap. So I go with it. I don't try to make it too complicated for myself. I don't need to know every single thing in Forex to be successful. I don't need to know every little detail. I just need to take a portion of the pie. Just enough so I can pay my bills and help my family out. That's all I need. I don't need to be a millionaire, trillionaire. I just need enough, 6 figures, 7 figures, or just above the poverty line just to make ends meet. That's all I need. Find the highest high. Here. What's above this high? Buy side liquidity. Simple. What's below this low? Sell side liquidity. Now, people may say, well, why didn't you not pick this low, Deontay? It's a swing low. Why didn't you pick this low? It's a swing low. Because it's broken already. This low has already been liquidated. This low has already been liquidated. That's why I'm not picking it. It's all been liquidated. These haven't been liquidated yet. So there's obvious orders above and below it. Because if anybody is selling, let's say hypothetically, you watch Forensic Forex daily gold updates and you follow that sell all the way down, right? You found that sell and that speed right here, right? Let's say you found that sell, boom. You got a stop loss above here. That's where you're most likely, if it's a long-term sell setup, right? You're looking for some type of low or something like that. You have a stop loss above highs. Same thing, vice versa. If something told you that this was a turning point and you happen to go long intraday or on a limit on the daily or the weekly, you went long, let's say here, I don't know, and you're aiming for something like that, most likely you have what? A stop loss below this low. That's it. That's all. That's simple. That means there's orders here and there's orders here. Now, Looking at the 40-day, we can see that it's all 40-day low and 40-day high has been mitigated. So what are they going to serve as? What's their purpose? Their purpose is just to act as a old high that price can trade to, or old low that price can trade to. That's the whole purpose of it. Because people see the high already broken. Oh, green. What are we doing here? There we go. People see the highs or lows broken already, and they think it's not important anymore. No, it is important. Because there could be a trade setup around that high or low. 60-day high here. And then who's lower? Who is lower? 65, 90, 60, 65. That's your cash forward 20 days. Now to answer this question, why am I cash forwarding 20 days? According to ICT, according to logic in general, let's say ICT didn't bring this to our attention, but someone would have, you know? Shout out to ICT. There's going to be a range expansion, right? There's going to be some type of power 3 play going on all time frames, whether that's the weekly chart, daily, monthly, or yearly. There's going to be a phase of accumulation, manipulation, and distribution every single month. Now, it's not always going to be picture perfect, and it's not always going to give a power 3 setup. It may accumulate. Look at this month, December, the last month of the year. Normally, traders shouldn't be trading because why? Central bank traders are on vacation. This is when they're spending all the money and millions that they make and at their all vacation homes and stuff like that. They're not trading. So there's low liquidity in the market. Yes, the market will still be moving up and down, up and down, up and down, up and down, but you're not getting that speed that you're looking for, right? That signature price action speed that you want to see. That's dynamic and it's making a higher high, lower low, higher high, low, higher low, you know? Then January kicks back in. They start coming back off of vacation, right? They're getting back into the office, coming back from wherever they are around the world, you know, Italy, France, Paris, or wherever they went. They're coming back into the market to trade again, right? And in February, they're booked in for the rest of the year. Now it's time to really go. The big dogs are in. That's why ICT was saying, leave December alone, leave January alone, February and on, that's where the big dogs are trading. These are just months, probably just to fake everybody out. You're wasting your time here. Not to say there isn't setups there. Yes, there is. Because price action is still going to follow the flow of liquidity. Take a high, run low. Take a low, run high. It's going to follow that. But is it going to be snappy and dynamic because the institutions are not there? No. That's why they're telling traders to avoid these 2 months of the year. And maybe even other ones. That's all up to your own due diligence and research. There are other months as well that you shouldn't be trading throughout the year. But these are primarily 2 months out of the 12 that I would totally exclude. Like Deontay is not trading here. Deontay's not trading here. But if I were trading, it won't be gold. It won't be gold. It won't be gold. It would probably be U.S. oil in December. So going into November, December, Deontay is probably going to change from currencies and go right into U.S. oil. That's what I would do personally. You can't just, you got to be multifaceted, you know? If you're trying, these banks want to make money too. You think they're only sitting in one asset class? No, they're not. They're trading cryptos too. They're trading bonds. They're trading commodities. They're trading metals. They're trading all the oils. They're trading all these other things. They're not just trading one thing. Yes, some people may specialize. I can only assume some people's jobs are to specialize in a specific asset class. But as a unit, right? As a unit or a branch or a broker or whatever the case may be, or as a central bank, there are specific people that come together and they trade all these multi-asset classes. It's not just one. What I would suggest to traders is you master one. And then after you mastered one, you jump into another one. And then you jump into another one. Now you have a basket of asset classes that you can trade year round. Because if the commodity section, right, if commodities are not popping and it's dead for certain months of the year, that means the commercials are probably trading something else. Maybe they're trading currencies. Now you know how to trade at least one currency. Now you know how to trade at least one metal. You know how to trade at least one crypto. That's how you do that. You rotate. People don't just invest on just U.S. stocks. They invest in foreign stocks as well. Chinese stocks, Indian stocks, European stocks, German stocks. They invest in other stocks than just the stocks that they have at home. Because you're diversifying yourself. You know, you're taking less risk. Because if you put all your eggs in one basket, that's a lot of risk. You want to spread the risk around. And that's what a lot of traders do. That's what a lot of entrepreneurs in general will do, you know? But moving forward, 20-day high, 20-day low, old high, old high, old low, old low. And I got to make that red. That makes me tick. Going into this month, I'm anticipating a range expansion or quarterly shift. Meaning, if the trend has been bullish or bearish for a couple months, right? Let's say it was bullish for 3 months. I'm thinking this next month, this might be the month within this range where it shows me it wants to go in another direction. For example, because the market works in waves. Doesn't matter where you start. Just look at the chart and notice and count. When the market starts trending for a certain amount of months, they're going to throw in a candle that's opposite. Or they're going to throw a candle that's opposite to the trend that starts the new trend. Take this for example. We can see it's hindsight. There was a leg all the way up and a leg down. Let's look at the peak of this leg up. Market does what? Trends up for 4 months in a row. 1, 2, 3, 4. This month was the quarterly shift. That means somewhere in this month, let's say October, if I were to use the IPTA data range in 012, right? It probably took out what? The 20-day high, the 40-day high, or 60-day high, whatever high up here, it took out the previous monthly high and gave a quarterly shift to make this new leg down. That's what I'm using IPTA for specifically. That's my primarily goal when it comes to using IPTA, because I'm looking for the turning point so that I can catch these large moves down. I want to catch the new trend. Sometimes I don't catch it. Sometimes I'm only catching that specific price action for the month, and then the next month it goes up. Happens. But you can see here how this new leg is all the way down. Look at how for this entire leg down going into 2013, there was only one up close candle. Counter trend candle. That was your opportunity. If you couldn't find a short position anywhere here, which you could have, this was the opportunity to tell you. And it's small. Look at the confluence as well. It's night and day. And it's a small monthly candle compared to the previous one. Large, small, large. Look how large this candle is. Opens here and runs all the way down here, taking out all the sell side on this side of the leg. And then it goes back into a small candle because this one is smaller than this one here. And then you keep going forward and going forward. So this is how you also know when you're going to get those larger monthly setups. Because if the previous monthly candle was tiny, if the body of that candle last month was tiny, you better be hunting next month. Why would you not? Look at every time the market gave you a small candle. Look how small that is. Look how large the next one is. Look how small this one is. Look how large it is. Small. Okay, let's say it's small. Another small one. You still have an opportunity to catch the large candle. Large. It's always been there in front of our faces. But we've been so looking past this. It's naked chart. Read the tape naked. What is price action telling you? Look how small this is. Small. Small. Large. But look at the trend. Look at how it starts trending for a couple months. Trend, counter trend. Up, down, up. Trend, counter trend. See how 3 months down. 1, 2, 3. Quarterly shift. Look how market starts going back up. There was a quarterly shift that occurred on this month here. Mainly this one here, because it's the actual swing low. But you can see how price comes above that swing low, the higher there. You could literally put a buy limit here. If you think price was probably going higher, you buy on strength. You put a buy stop here. Price comes up, boom, hits you, and you're in on strength. And you take it to what? Probably buy side liquidity. And what happens? Price runs the buy side liquidity above this high here. Doesn't take much to make a lot of pips out of the market if you know where the higher time frame is most likely going. And this is my personal take, because other people may argue with me. I remember the other day I was in an Uber. I was in an Uber in the city of Manhattan. And this guy is telling me how he's like funding and stuff like that. And I was like, oh, that's cool. That's what's up. You know, like I'm always down to hear someone else's game. But then he immediately opened up his MT4. And you know what I saw? I saw indicators. And that's all that told me that I knew that he didn't know what he was talking about. That was it. Not to try and diminish anybody that uses indicators, but I know that you probably don't know price action the way I know it, or the way the other people, at least in this market, know it. Soon as he opened up his MT4 and he turned around and showed me his phone, and I saw all the indicators on his chart, I said, "Dang, this is pointless. I'm having a conversation with someone that doesn't know what I'm talking about." Because he uses indicators. And he was like, "I'm a scalper and I do this and blah, blah, blah." He's like, "All these funded accounts are just for scalping." I'm like, okay, buddy, do your thing. But that's how I'm using IPTA as the quarterly shift to help me find out if the trend is going to change. Look at this drastic. I want you to see this. Look at the 1, 2, 3, 4, 5, 6, 7. 7 months down. 7 months down, bearish. And it only took 3 monthly candles to go back up. I may have never seen this, right? Before. Wow, that's like insane. This is pretty much the entire year. All price action down. But you can see here, it only took 3 months for price to recover this liquidity void. Does this probably tell us that price is probably going to continue to go down because these are just counter trend candles? Yeah, you could look at it that way as well. Like I said, it's not one dimensional. Got to open your brain up a little bit. Think about the charts for a bit. Think about what's going on around you globally, locally as well. What's going on in your local neighborhood? Are people holding cash? Are people investing more? Ask your neighbors what they're doing, and I'm not talking about your trading neighbors. Talk about your 9 to 5 friends. What are they doing? What do they think about the economy? What do they think about spending more money this year? Are they saving more? Are they budgeting? Ask them. Ask them. This will get you a real perspective of what's going on locally, and then you could probably suspect that might be happening globally as well. I live in America. I live in New York. I know somewhere across the sea, right? In Australia, in Europe, in Africa, in China, people are probably budgeting. People aren't spending as much. I know that. Because I know here locally, if I ask my neighbor, "Yo, what do you think about the world?" I think things are not heading the right way. Well, why do you think that? Man, prices keep going up. I have to spend more. What was the word? My purchasing power has decreased, right? The value of homes keep going up, but the salaries aren't going up. Minimum wage isn't going up, but they keep increasing the products and services that we have every month. Food prices keep going up. Fertilizer keeps going up. That's a sign. Wake up. It's not too hard to understand some of these things. You don't need to have gone to college for 4 years, 5 years, 6 years to get a master's degree to tell me what's going on in the world. You're living in the world. You have experiences in the world. You spend. You need a roof over your head. You either have children or a spouse or a partner, right? You have bills to pay. And you will either feel economic pressures, especially if you're inside the middle class or lower class. You'll feel it. Playing this forward. And that's where we are right now in price. So we returned back into what? IPTA's old 40-day look back high. I'm going to draw this out. 40-day look back high. We stopped close to it. Right? Same thing here. Price is trading around what? This 40-day look back low. Look at how it comes up, comes down. Look at how this wick. Look how perfect. It's almost perfect because if I zoom in. Look how almost close it comes to that. Then it runs right through it. With speed. Runs up, takes another candle, it runs up. It gets here. What is it probably reaching for? Buy side liquidity. What's up here? It doesn't have to be the IPTA highs because people exclude those highs. I mean, make those highs the only thing that is their main focus. That's not my main focus. I know that there's other highs in here that haven't been broken. Where are we now? Close to this high. Close to this high here. Back into what? This speed again. We're coming back into that original fair value gap that I showed earlier in February. We're getting close to that again. Could this be another touch into it to then bring price lower? I don't know. That's up to you to decide. And I think that's it on that. So we just jump into the weekly range. What time is it? Okay. I'm on daily, and then after this, I'm gonna answer all the questions. I do all the questions from people here in the live chat, and then after that, if you want to stay, I'm gonna answer the questions that people that couldn't be here live, that wanted to be here live, and wanted to ask me questions. I'm gonna answer that last, so that's a section dedicated for them. NFP week, man, sloppy week. Don't trade it. That's just my safe bet. Put your feet up, relax, demo trade. But if you're gonna not listen to my advice or other traders' advice, and you don't want to listen, and you want to trade it, aim for 10, 15 pips intraday. Get out and get your money. Get your bag. Call it a day. This is Sunday's opening price. I want you to see how they're trading. I want you to see how every week they're using this weekly opening price to gear themselves for their sponsorship. We can clearly see with hindsight, they brought cheap discount. They brought below the weekly candles open right down here. Tuesday makes the low of the week. Wednesday makes the high of the week here. Thursday trends lower. And then going into NFP week, we just run lower. Choppy week. There's not much to talk about here, honestly. I mean, we could sit here and talk about certain things intraday, because I don't like to make the chart messy, but yes, we have accumulation, manipulation, distribution. And we'll talk about this briefly. If you miss the low of the day, let's say you suspect higher prices for the day, you miss the low of the day, like you come here by 1 a.m., 2 a.m., you set an alarm, New York time, and you see London has already taken out the low of the day, and you can't capture that, what you can do is just place a buy stop. Take this off. Place a buy stop right here. Price runs into it, you get in long on strength, put your stop loss below the Asian session low. Do not let that go over your head. I just gave you a very easy way to get into the market without having to overthink it. If you know this day is going up, and we know that the markets are normally gearing around the Asian session, right? It's either your order gets filled or it doesn't get filled. It's either going to go two ways. The order gets filled and you make money. The order gets filled and it hits your stop loss, or your order literally just doesn't get filled, and it's okay. But if you know this price action is going higher, you just place a buy stop here. Get into the market on strength at the Asian session high. Accumulation, manipulation, distribution. Right up here, you're getting in long and you hold for higher prices. Whether that be 20, 30, 40 pips, whatever it is. Whether it be 3 standard deviations higher, or 4 standard deviations higher of the Asian session, or 3 standard deviations higher of the central bank dealers range. You find different metrics to take profit and scale out. That's how I would play that. That's the lazy trader approach. But you can see here time and time again. Bring it back. Weekly open, that's Sunday's opening price. That's midnight opening price. It's really bothering me that there's a lot of lines on this chart. It's not clean. That's midnight opening price. Look at the double confluence. It's a discount for the day, and it's a discount for the week. They're buying very cheap, and it's a rocket ship all the way up. Yeah, there is a footprint here, but like I said, it's NFP. They're gonna tackle both buy side and sell side. They run back up. What do they take? The previous weekly high. I posted this earlier in this week in the channel. On Monday, I think it was Monday or Tuesday, I posted this. I posted this chart like this on the hourly, and I showed you the previous weekly low and previous weekly high. I was suspecting price to do this, but it didn't do it. Tuesday takes the previous weekly low, then we get the rocket ship up. That's what I was thinking. Didn't happen, unfortunately. Still took a discount buy, but it just didn't get to the area of interest that I wanted it to. Then price came up. That was just me studying price action. Then it came up. Took out buy side liquidity above the previous weekly high. After taking out the buy side liquidity above the previous weekly high, what does it do? It comes back down to finally take out the previous weekly low. Isn't that funny? It's a seek and destroy. You see that? Price comes down here, stalls. Look how it stalls so close. It's so close to it. Doesn't get there. Then it shoots up. Then it stalls again on Wednesday. This week is so trash. Comes down. Stalls again. Gaps down. Even gaps down. I drew the PDA right here. Gaps down. It's trading multiple times into it. Back and forth, back and forth, back and forth. And then finally comes down. And finally gets down to your previous weekly low. Just not a good week, man. It's just weeks that you just want to avoid. You can live. It's okay. You don't have to trade every single week. You don't have to trade every single month. Let's go into UJ. Same thing. So choppy. Not choppy as in like the whole week it's like this. But it's not decisive like other weeks, right? When I say decisive, it's not going down on a Tuesday or Monday or Wednesday, here or here or here, and then it gets the rocket ship, goes up, comes down on Thursday, and then Friday closes higher. It's not one of these clean weeks like this. No, it's not. It's coming in, grabbing buy side, running back to sell side, taking sell side, running back to buy side. Confusing week. It's easier to save yourself the trouble, but they're going, I'm telling you, these channels, these pages, these people are going to sit here and try and promote. You can trade the NFP week. You can do it. I do it all the time. I twin trade. I put a buy stop here and I put a sell stop here. And I try to, and whichever side the market goes, I close one. Bro, you're going to be in drawdown for one. I'm telling you, that model is just not feasible, in my opinion at least. People like to twin trade or hedge in the market, buy and sell at the same time during NFP when the news drops. When the news drops, you're not going to be able to get out and close those trades. It's most likely you might get stopped on both sides, right? It's going to come up, take out the buy, knock you out. Come down, take out the sell as well, knock you out, and then finally it's going to run down in its true direction, and then you're just going to be upset when you could have just waited till Monday and Tuesday next week to trade. But that's neither here or there. What do I know? Choppy, like I said. Sunday's opening price, same thing. Look at how they accumulate the orders. Manipulation in London, and then it runs higher. Now, I had a question before, too. I'm going to answer this here as well. Someone asked me, what do you mean about 3 a.m. in London? You know you're going to be on, you either know you're on the right side or the wrong side. 3 a.m. for me, so what I was doing before, previously, I was using 1 a.m. to 3 a.m. Even though I know London, for me, starts at 2 a.m. Some people started at an hour earlier at 1 a.m. But I was having a time window from 1 a.m. to 2 a.m. to 3 a.m. was my window of a Judas swing. Sometimes it happens later, like 4 a.m. and 5 a.m. But normally my window for the Judas swing was 1 a.m. to 3. I was showing this a lot often last year. I'm looking for the Judas swing to occur here. I know the low of the day, if it's bullish, is going to most likely form here in this time window. So by 3 a.m., I know that they got the retail traders on the wrong side. And if you see here, it happens 4 a.m. here. That's what I said. Sometimes it happens at 4, and sometimes it happens exactly at 5. But for my filter, Deontay's personal filter, I like the 1 to 3. The heart of London is 3 a.m. That's the midpoint of London. 3 a.m. normally is going to be the part where I know I'm either right or I'm wrong. 3 a.m. comes around, I know if it's bullish, they got all the retail traders on the wrong side, and look at how quickly they start turning price around. Quickly. And the same ideology stands here. If you miss the low of the week, the low of the day, just place a buy stop above the Asian session high and run it higher. That's it. Simple, lazy trader approach. You don't have to look for the breaker, the fair value gap. If you don't see those things happening, if you happen to not struggle to see those things, use your Asian session as your magnet. The Asian session, in my opinion, has price action revolve around it a lot of the times. A lot of the things are geared and started in Asian. It all starts in Asian. And everything else after that is keying off of the previous session. And I said this to another fellow trader as well. Another tip, if you happen to watch this video long enough. All the sessions and all the days, guess who starts it? Do you think retail starts it or you think the commercial started? Retail. Absolutely right. Retail starts all the sessions. They're the first one. I'm telling you, retail is the first one to start trading. They're desperate to make that money. They're enticed. That's why you're seeing here the start of the London session. It's all the retail traders that are most likely getting into, not saying that their retail traders are moving the price action, but I'm saying a bulk of them are jumping into the gate first. They're jumping off of the bridge first. And what are the commercials doing? They're waiting. They're letting everybody jump off first. Ah, dang, he doesn't have a parachute. Dang, look, he doesn't have a bungee cord. Ah, he doesn't have a safety net. Yep, got him. They all jumped. And they get cooked. And what happens? The commercials then take their leap after. With a parachute and everything. They jump off the bridge with a parachute and they come down landing safe. They have a safety net and everything. And a target and goal. While retail traders are just jumping in, aimlessly jumping into the charts. Thinking that it's just going to drop. They just start selling. Sell, 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 sell. They have no idea where it's going. They sell, 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 sell. It gets below a previous daily low. And then all of a sudden, the market goes quick on them. Right? And they're just like confused. People are just all confuddled. They're like, what? What just happened? I thought the market was just going to break down because it was moving sideways and it broke out. I should get a retest full lower. That doesn't happen all the time. And look at where it's happening. Below the weekly open. Even though it's NFP week, the fundamentals are already baked in. They can't change this logic. As much as people discover it or they realize it, it's not like they can change it. Because a lot of people are still not going to know it. As much as all the traders that know this spread awareness to their fellow traders, still not going to be enough. There's going to be a lot more retail traders than there are smart institutional traders. That's just how it goes. That's why ICT says inner circle trader. It's a small circle of people controlling the price action. That's it. It's not the large group. The large group is the sheep. There's only a few wolves. And there's 1,000 of sheeps out there. And they're going hunting. Accumulation, manipulation, distribution. Choppy. Comes back down, runs back through Sunday's opening price. I don't like that. I don't like when the weeks are coming back to Sunday's opening price. Not good weeks. I want it to leave Sunday's opening price and not return. Right? So if price makes the low of the week on Tuesday, which is nice here, and it runs up, Wednesday is permitted to give a retracement, then go higher. That's what it's supposed to do. If it's going to continue to go higher throughout the rest of the week, I want to see it do that. I don't want it by Wednesday to come back down to Sunday's opening price. By New York session, I want to see this break Tuesday's high. If it doesn't do that, probably it's going to keep stalling and it's going to sell lower. Thursday comes back down, consolidates. Odds are it's going to try and touch Sunday's opening price again. And it does it. And it does it here. Comes up, boom. And when does it do it? Does it after breaking a previous high. What is the high on Thursday here? Right there. What does Friday do? Friday comes up into a premium high odds sell scenario once again. I'm going to show this every Friday. I don't care how many times I show this. Comes up above Sunday's opening price. It is already above Sunday's opening price, so it's in a premium. It comes above also what? Intraday. Midnight opening price. The intraday, true day. Now I know many people are confused. The 5 p.m. opening price. 5 p.m. opening price is nothing to me. It means nothing. There's no significance there. It's a dead zone. Like I said, 12 p.m. to 8 p.m., dead zone. No volume. You're going to find consolidation. Let's see that on the chart here. Look at that. So obvious. 5 p.m. is right here. Do you see any significance here? I see nothing. Do you see any significance here? I see nothing. Here, yes. Some people say, oh, but what about this day? Yes, it was trending. But odds are you're not going to see that all the time. Let's just zoom out and look at all the areas of price where price is not highlighted by my sessions indicator. Look at how it's consolidating. Wow. Consolidation. You want to trade that? Go ahead. Be my guest. You want to trade this too? You want to trade this as well? You may get some. Some of this is portioned into London close. Just keep that in mind. 12 p.m. is the cutoff. But look at this. Even London close will have consolidation. That's why before I had my Asian session from 10, my Asian session model with the New York lunch start with 10 a.m. But I've adjusted it to just 12 p.m. because I didn't want it to overlap with the London close. Consolidation again. Look at all the non-highlighted areas. Come on. New traders don't know this stuff. I'm telling you, they don't know these little things, which is why they're getting cooked. Look at that. Yes, you get days that trend. You'll get these days that trend up. But I would rather play the sidelines for a couple hours to then start trading again during Asian session. I could go. It's Time and time again. Yes, you get days like this. But how often do you get days like this? Not often. You're not going to get sessions like this. The New York lunch session is dead. 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 I don't have to show any more. This is so many weeks, many days of examples. I can go back. It doesn't matter the pair either. Doesn't matter the pair. However, I would say crypto, though, personally, for those that like to watch crypto tends to be more popping or more like exciting around London close. Intraday, I have to jump into this now because I talked about it, because then people are going to be like, oh, what are you talking about? Ah, man. I'm going to give everybody the world, man. Look at this. This is New York session. I don't need this on my chart anymore. This is New York session. Look how dead these periods are. It looks completely different from fiat currencies, right? Completely different. Look at how the kill zones, the ICT kill zones, they're not exciting for crypto. Your standard Asian session, New York session, London session, they tend not to give a lot of pips. Even though Bitcoin and crypto and ETH and all that, they run large. But I'm saying, look at the size of the candles versus the size of the candles outside of the non-highlighted areas. London close tends to be very entertaining. That's what I've been noticing, right? And I know a few other fellow traders have noticed this as well. Outside of the sessions, crypto tends to be more interesting. But during the kill zones, it's not interesting. That would only make me speculate, because I was talking to another fellow trader. Shout out to Julian. He was telling me that the commercials are probably taking their time when it comes to getting into these asset classes. Maybe first they're starting with bonds, then they're moving into S&P minis, then they're jumping into currencies, then they're jumping into crypto last for the day. That's what he told me. And I was like, that kind of makes sense. They have a schedule of when they're probably going to jump into the market. Look at all the highlighted areas. Not really interesting. But look at right after the New York session. It's normally very interesting. And there's a lot more speed after the New York session. That's crypto for you. So it's not the same kill zone in my opinion. And it's clear as day. I'm showing it here. You do have days like this. There's probably some news event or something, right? Or somebody really dumped during this Asian session, and it dumped. But most of the times, I think the London close for crypto is the most interesting session for your cryptos. Those are for the crypto heads out there, because I don't want to ostracize and exclude anybody. Try my best to touch on other asset classes that people want to see, because I know some people want to see the S&P, some people want to see gold more, but there's only so much that I can do, and I only want to really show the things that I'm experienced in. I only want to talk about the things that I'm experiencing. A lot of other people are going to sit here and tell you about things that they have no idea about. I'm not going to do that to you, because what am I going to get out of it? Steering you down the wrong path. Nothing. And that's not honest and just. I want people to win. We were going to talk, go back to GU. Same thing, choppy, seek and destroy. Comes back to Sunday's opening price. I don't like that. Friday's coming back to Sunday's opening price, not a good sign. It's a seek and destroy week. Inverse, you can see on Tuesday, same thing. Accumulation, manipulation, distribution. It's the same idea. Look at where they're buying again. Same principles. They take out the previous daily low. They take out the Asian session low, right? They take out the low. They sponsor the buy setup in a discount, taking out sell side liquidity. Then they run it back high. To then what? Take out what? The highs that they created here. They engineered. They knew that they were going to come back here. I want you guys to know that. The algorithm knew from the start of the week that it was going to come back here. After dropping here, it said, yeah, we're coming back here. It knew it. The algorithm already knows where it must go. Where it's not, it already knows it's going there. It's a computer system. It knows. It's smarter than us. It's all algorithmic. It knew that it was going to come back here. But it had to do it strategically and methodically. And it's going to run up, run down, run up, run down. And then it's going to run really fast up. And then it's going to run really fast down. And then it's going to consolidate. Then it's going to reaccumulate. Then it's going to fake traders out. That's the whole process here. See how it comes back to these highs? It's a seek and destroy. And what do they leave down here? Equal lows. So that's something to look at too as well. Equal lows, equal lows, equal low, all this, all equal lows. We'll move on to the next one. Gold, same thing. All the pairs are doing this. Seek and destroy. Accumulation, manipulation, distribution. Yeah, it does happen here. Unfortunately, this one didn't give you the high probability sell. If you were looking for that, it gave the sell and a discount. Happens. It ain't gonna be picture perfect every single week. But we know if we stick to a model and we stick to a filter consistently for the rest of our trading careers, we're going to be successful because we know this is sound logic. Here comes up above the Asian session high, liquidates the buy side, runs back down, takes out the sell side, and continues to drop lower. However, you see how DXY took out Wednesday's high, I believe, or Thursday's high, or whatever it was. See here, gold didn't do it. Not all the pairs are going to do exactly the same thing. All these lows are still intact. Just took out the high, took out this high, and it's running up. And I have to readjust this because session ended here. But where did it come back to again? This high, right here. That's all I was doing. Seek and destroy. One last thing. All right, one last thing. I can say this. One last thing. Asian session model. Clean. If you are looking for a model that is very simplistic for you to trade, and it happens to fit your time schedule and your life period, wherever it is, wherever you live in the world, this may be a model that fits for your life schedule and your work schedule. The Asian session model. From hindsight, I just want you to look at this. The red highlighted zone is the dead zone I was referring to. This is 12 p.m. to 8 p.m. The green highlighted zone is 8 p.m. to 12 a.m. midnight. All New York Eastern Standard Time that I'm talking about. You can see how these areas are most likely going to give consolidation, or they're going to make high swing points and high and low swing points, and then run back into a range, and it's range bound. You can see that in the red areas here. Look how this is range bound. That's that dead zone I was talking about, the New York lunch session. Look at this. We are looking at AJ, for instance, but if we were looking at like UCAD, something like UCAD real quick. This is mainly about talking about the yen pairs. But if you look at something like UCAD, you can see that it's choppy. Yes, you get those trending markets, but look at how it starts moving sideways. Sideways. Odds are it's a dead zone. Doesn't take much to see it. This is a quick back test and back study. When you put the indicators on, like this at least, and I'm not talking about indicators that tell you buy or sell, indicators to point out sessions, you can quickly shuffle through your charts and tell what time periods of the market things are going with speed and there's institutional backing behind it. We can tell that these are not the time periods because any of the unhighlighted areas are where the markets are really popping. Look at that. Look at that. Asian and London, I keep saying London because it's red. New York lunch session is not intriguing for UCAD or any currency based in US dollar. It's just not. I want you guys to understand that. So if you're trading UCAD, UJ, USwissy, UJ is excluded because it's crossed and quoted through yen. But if you're trading UCAD, USwissy, odds are you're going to face consolidation in these two highlighted areas, Asian and New York lunch. And as you can see, you are faced with that most of the times here. Not saying you can't find a trade setup, but it's less probable for you. I don't know what pair I was on. I forgot what pair I was on. I think it was EJ. Yikes. I think it was EJ. Hope it was EJ. Because I always mix these up. EJ, UJ. I think it was EJ that I was trying to show you guys the example. This was a great example. The Asian session model, like I said, you're seeking buy side and sell side liquidity. And like I said, you can tell that the retail traders are starting this session because look at how they're making them go on the wrong side. Then the commercials are stepping in. So around 9, same thing. For Asian session, for me, I think around 9 a.m. to 10 a.m., that's when the 10 a.m., 9 p.m. and 10 p.m., the commercials are stepping into the market and moving it towards the intended direction. This is normally going to be feasible more likely on the yen cross pairs. If you like the yens, you need to be trading the yens during Asian session. if we were to look at an example, this is what I'm doing for the session. I'll put it on so we can see it. I'm taking the highest swing high, lowest swing low, or any swing high or swing low that was not mitigated. It's almost like I'm using IPTA here. It's the same logic. It's the same fundamental. I'm teaching the same concepts to you guys, but just on different time frames. We'll call this the lowest low. So we're going to take the lowest low of the session. That's sell side and that's buy side. Going into 8 p.m., we know that this, what is this? BOJ rate decision. And these, I mean, I call them fools. These people need to, these central bank traders need to get on page, man. They need to increase their rates. Nobody's liking yen right now. So you can see price trades down. Look at how, oh my gosh, look how quick that was. Look how quick that dynamic reaction was. Comes down and it runs straight up like that. But what is occurring when it takes out this sell side, right? This sell side liquidity. Let's scale down. There's probably going to be some type of footprint or fingerprint here that is showing that they want to bring price higher. So if you go on a lower time frame, oh, that was so quick. You wouldn't have caught that. Yep. You ain't going to catch those. That was quick. That was a quick one. This example was really quick. But I'll show one more example to see if we can show an example here. But you can see here, price shoots back up to what? Buy side. Really quick. And what do they leave down here? Probably sell side again. And we'll play it forward. After taking this buy side, what do we have left? Sell side. Right? Intraday at least. We have sell side. So you are going to probably look for some type of footprint or fingerprint above this high after mitigating the buy side liquidity above that 15-minute swing high, these equal highs, this consolidation box, fair value gap here. And I personally like the 1 minute. That doesn't mean you can't use a 3 minute or 5 minute, because you may get the entry on the 5 minute, but you may not get the entry on the 1 minute. And you have one here. So you have two instances where price action gave you a fingerprint to potentially go short. Does it mean it's always going to work? Not necessarily. But that's how you're getting into higher odd trade scenarios. Let me speed this up to see the result. And it falls through. It falls right through. But you would have a stop loss of probably 10, 15 pips. I'm not going to play it all the way through. Just stop it there. But if you look at these days, you'll notice, look at the highlighted areas. I don't want you guys to overthink this. I know you guys, he's just jabbering about nonsense. I'm not. I'm trying to show you guys something here. Look at this. Look at how Asian session starts. It takes out the highs here. And what happens the next day? It runs back down, takes out the sell side liquidity below these low. It's not an everyday thing, but it is a consistent model if you do it long enough. Look at this one here. It takes out all the sell side liquidity here, sell side liquidity here, and what does it eventually do? It runs back up to the buy side liquidity. Oops. It runs back up to the buy side liquidity. It doesn't happen during Asian, but it happens after. So sometimes if you catch the tail of the tiger down here, you can hold it into intraday. You can hold it into London and New York. That's why I like the Asian session, because you can kind of get more than just 15, 30 pips. Sometimes you might get those home runs. And we're just going to briefly just run through them and see how you can see liquidity is going from one side to the other side. Look at this. What happens here? It takes out. Let me zoom in. And I like to do it on the 15-minute time frame. What happens here? It takes out 15-minute swing low. Right here. Boop. Just briefly. I want to see what happens here myself personally. I want to see if there's some. This is how I backtested, honestly. This is how I figured out that this model was there. And I was like, oh, there's something here with the yen pairs. And ICT did introduce me to the idea as well. But I just try to make it more feasible for myself. And I was like, okay, is there going to be some type of price action that's going to show itself here? There goes a fair value gap there. and I wait. That's one. That one's larger, and there's another one here, and I just wait, and I'm just getting an entry. But where's my entry going to be? Think about this as well. All these ideas are fractals. This is Asian session open. That's 8 p.m. 8 p.m. Isn't it just like 12 a.m. opening price? Yes. It's the opening of the session. Retail traders are getting in. They're getting retail traders to go on the wrong side. Where is price going? Below 8 p.m. What is below 8 p.m.? Discount. High probability buying. Same thing. It's not anything new that you've seen. Price trades down into it. Let's see what happens if you get a reaction higher. If we can get that lower one. Oh, does it get the lower one? Come on, come on, come on. Hey, you got me. You got the lower one. Nice. You tagged it. I like to see that. Could it run all the way through that and fail? It can fail. And then it run in your intended direction? It can. But where is this going to run probably? Buy side. For this video's sake right now, we're on the 1 minute. Let's just say here. Right? Because I'll be showing the 15 minute. It would have been this one up here. The highest one. But that's all buy side liquidity above those highs. We'll play it forward. Speed this up. Tag that one. And I think it happens after the Asian session because the Asian session is about to end. Too long. It's taking too long for me. 5 minute. Time is money. Oh, it came all the way back down. So, yeah. Took out the buy side, and now it went seeking for sell side liquidity below the Asian session low. Look at that. Look at that. Comes all the way back down to the Asian session low. Do we get it to come back to the Asian session high? I just want to see that. No, not here. Same thing here. Takes out the low, and then ultimately happens what? Runs up here. Not to say you're not going to get stopped out, because you will. People keep saying, oh, I'm the best trader ever. Even the best traders take losers. They take losers. But you know what they're doing? They're cutting their losers early, and they're risking properly. And they're lowering their risk when they take a loser. That's what they're doing. I want to show you a buy side one. Here. Takes out a short-term high here. Gets close to these highs, but takes out the short-term high here. Runs back down sell side. Same thing here. Takes out the sell side here for the red highlighted area. Runs back up. New York, London session. Runs back up above the buy side. And this is normally best feasible for the yen. Oh, there goes a good buy one. A good sell one I wanted to show. Right here for Asian. We got price comes up. Above that. High here. So I'm coming from here. I'm taking this low here. I'm taking this low here. I'm taking this one here. They're both relatively equal, so I'll take the lower one. This one here. That's all sell side. That's buy side. Look how it takes the buy side first and then runs lower. This will be the last one, and I'm going to jump into the Q&As for anybody that's probably still here watching. Sorry if I didn't check the chat. I just have a lot of information to share to you guys. On the 1 minute time frame, right where the break is happening, I'm looking for a fair value gap. There goes one right there. It may not be the most high probability fair value gap that breaks the swing low, but there it is. You see it? Look at how price makes the fair value gap after breaking that swing high. Right there. Boom. You go short. Probably, hey Siri, stop playing music. Siri's talking to me. Price comes up, and then price comes down. I'm gonna play it through. And what happens after it? Look at how it hits that fair value gap 1 time, 2 times, and now it's done. It's not trying to hit it like 8 times, 20 times. Like I said, if it wants to move off of this fair value gap, it's going to do it quick. You know you got it right when you're in profit more than you are in drawdown. Tell me I'm wrong. When you're in profit more times than you are in drawdown holding your trade, the actual time that you're in drawdown versus the time that you're in profit holding your trade, I guarantee you the trades that you're in more drawdown hit your stop loss. Promise you. And the trades that you're in more profit than drawdown, you probably hit your TP. It's always been that way because you got it right. And the institutional funding and sponsorship is behind your trade. You got the trend right. The reason you're in more drawdown is because you got the trend wrong. And they're just stalling price. And they're stalling it until they run and hit your stop. And what happens? Price runs back down to sell side. It doesn't happen it happened after the Asian session, I believe. Oh, it happened during the Asian session. Look at that. Hits the sell side liquidity after taking out the buy side. There's no magic here, guys. People are making trading complicated. People want, I need Chat GGP to go trade for me. No, you don't. You are Chat GGP. I mean, I understand. People want to make things easier for human beings and use technology to escape all the hard work and stuff like that. But hard work pays off. At least you know this in and out. Other traders don't know this until they come across the channel and they come across other traders that trade like institutional or smart traders, etc., etc. But even then, I don't even like to consider myself that. I just know that I'm informed. That's it. I'm just an informed trader. That's all it is. So that will be it, man. Hopefully you learned something new today. As always, man, leave the indicators alone. I just don't have anything else to say. Like, leave the indicators alone. Yeah, if you have any questions, let's see who's still left. There's like 6 people here. Cool. Chat. Indicators. Shout out Aaron. Facts. Aaron, love you, man. Happy birthday, fam. Alright. Any questions? If not, I'm just gonna jump to the channel. I'm gonna put my phone and answer these questions that people have sent to me in the chat. Give me 1 second. Okay, let's open up the Telegram. Shout out to everybody that's in the Telegram channel too. Much respect, much love. Appreciate everybody supporting and trying to learn these questions. Where are the questions at? I know we had a few people that couldn't make it. It's so cool to see like people from around the world, you know? All right. How would you have taken... So this is like money sign me, unless I've got your name wrong, I'm sorry. You got a few questions. Whew, okay. How would you have taken a trade today using your simple entry techniques during London? And talking about EU, he's probably talking about NFP. So he's talking at NFP. So let's jump right into NFP. Ooh, got a few questions. I answered a few of them. I'll go through as many as I can. Oh, this is Asian model. Nope. Notice as well, different templates. I don't have everything. I have everything broken up. Monthly, IPTA, 1 hour, Asian. Keep it separate. I'm not trying to confuse myself. Because when I'm looking at Asian, I'm only specifically looking at the Asian model. I'm not trying to add in any other confluences. I'm trying to specifically follow the model. IPTA, specifically only for IPTA. The 1 hour chart, specifically for the weekly range. The monthly, specifically to tell me whether or not price is going to go higher or lower for the month. That's it. Higher time frame trend. But this question was about GU, and it's probably about NFP because they were asking about today. Like I said, I don't trade NFP, but how would I have gotten into the market personally from a lazy trader approach? If I'm getting this question right, yeah, simple entry techniques. Yes, okay. Midnight opening price is here. Price drops down below it. You may have not gotten that because it only drops down below it just by a little bit here. Midnight opening price is right there. Right? So anything below that's a discount. But I already know I'm in a discount for the week. So there's a double confluence and it's Friday. So I already know Thursday, Wednesday made the low of the week and it's coming back up. Right? It's making that... Well, I forgot what retail used to call this, man. Ah, man. So far gone from retail, man. My earlier days when they were teaching me all this retail pattern stuff. They called it like the ditch or something, or cup and handle. I don't even know what they called it, man. I can't remember. Whatever it was. Price comes down here. Takes out the previous daily high. Honestly, I would have missed it. I'm not going to sit and try and say I would have saw anything. I would have missed that. Be honest with you, my man. I would have been like, yo, I honestly don't see a trade set up here. But I do know It's cheap for the week. It's cheap for the day for a second, and it takes off. Like I said, these days are just not the most feasible to trade. They're not always going to be clear cut. I personally step out of the market, put my feet up, relax, and I let retail traders lose their minds about NFP, and then I hear about it in the chats, in the forums on TradingView and stuff. It's so funny. You jump into these chats on TradingView, man. Oh my gosh, a lot of nonsense that people are talking about, and I get a kick about it. It's just a good laugh to humor me. But I don't trade on NFP. I'll keep it cutting short. Yeah. But if you knew it was going higher, if you had to know it was going higher, you just go long at the Asian session high. Call it a day. Go long at the Asian session high. Stop loss below the Asian session low. You would hope that it doesn't come back down to the Asian session low, and you hold. That's it. That's one way. That's the only way I would have saw this as a buying opportunity. That's it. Same thing for EU. Let's see. Let's jump down to EU. Do I have it on here? I know you're somewhere. Same thing for EU. You can see it takes high, then low. I said this before, many times before. Normally, if London takes both sides, the first break, right? The first break. It's so funny when you see it, though. Because some people think, oh, what? The first break is the real move. Yeah, it's the real move. It breaks the Asian session high first. Then it breaks the Asian session low second. This is the Judas swing. Right here. Up, down. This down move here, that's the Judas swing. They're bringing all the retail traders into the slaughterhouse, and they're cutting the chickens' heads off, or they're killing all the goats and the sheeps. That's what they're doing here. That's the ICT Judas swing. You can even YouTube it. That's the Judas swing there. The first break is the real move. They're telling you where it's gonna go. So that means they did what? They made retail traders go long. Then they stopped them out. Then they made retail traders go short. Then they stopped them out again. That's what's happening there. That's the ICT Judas swing in simple terms. So like I said, you probably would go long either at the Asian session high or the Asian session low. Buy limit, buy stop. Call it a day. Have a stop loss of 40 pips, 30 pips. Next question. How do you get your daily draw on liquidity using... Oh, okay. This is a nice one. It's a nice one. This is a no-brainer. I want to see any previous daily highs or lows broken. It was a good example on UJ. GU. Here we go. GU. So, discount takes out the previous daily low, sell side liquidity. Is there any fair value gap on the higher time frame telling me that it's going to go higher? Do I see any here on the 1 hour? Like I said, this is the NFP week. I'm not about to go back to weeks because I want to keep this short and concise. There's a few questions to go through. But is there any fair value gap here after taking this swing low to the upside? The same way I'm showing you on the Asian session model. Same thing here. Takes a high and then gives you a fingerprint. Is there any fingerprint being shown here for me personally that I see? Is there a fair value gap? Is there a breaker? Is there a mitigation block? Is there something here that's telling you that price is going to go higher? That's what I'm looking for after the sell side liquidity is taken or buy side. Let's see. Just for reference sake, let's go in a 30-minute just to see. I'm looking for my fingerprint. Comes close to that one. Doesn't hit though. 15. Go down to the 15-minute time frame. Yeah, we got one. There we go. We got one right there. Look at that. That was the one. The more probable one because it breaks the swing high. That's the one I'm looking for. Take off the session so you guys can see it. There it is. Speed up. Breaks all these swing highs within its gap or inefficiency. Look at all the swing highs here. Swing high. Runs up. Price trades down into it after taking out the previous daily low. Like I showed in Bitcoin. Takes out those highs and then it starts running lower. And that example of simple entry techniques. You see it runs and then it runs higher after trading off of that one fair value gap and then trades higher. Yes, you're going to sit here and say, oh, I see the breaker. Okay, that's up to you. I'm showing you the footprint or fingerprint that I like to see. That's the one there. I would wait for that specific one. And the specific one that's breaking the swing high, I don't want to take this one. This one here. Because some people are going to say, oh, what about this one? Or even this one here. Oh, that one's actually a good one too. I didn't see this one. See? Gotta pay attention. Is it inside the range? It is. Look at that. There goes the fair value gap. There goes the little fingerprint that Deontay likes to look for. There it is. Boom. Look at the bodies respect it. Yeah, wicks below it, but look at where the bodies are landing. The bulk of the true volume is here. And ever since then, like I said, price kept going higher after taking out the previous daily low. Look at how it trends up all the way up into NFP, and then NFP gives you that rocket ship up. So from that ideology, you would have made some pips. Okay, next question. What do you... when the previous daily low is taken and it never runs the previous daily high. Quote, if Monday's low is taken out by Tuesday, and Wednesday took out Tuesday low, where will the next draw on liquidity reset Wednesday low? And am I right? All right. I know that's a little typo, but it's all good. I typo too. You're not always going, like, okay, I understand the question. So that's saying, okay, let's say Monday took out, let's say Tuesday came up, in this example it did. Tuesday came out and take out Monday's high. And then Tuesday comes down, right? And Wednesday takes out and Wednesday's low. Wow, wow, your question is literally on this chart. I hope you see this. I hope you watch this video to the very end. Your question is literally on this chart. Tuesday takes out Monday's high, Wednesday takes out Tuesday's low and runs higher. But you're saying, in this case scenario, if Wednesday takes out Tuesday's low but never gets back up here, right? If it never gets back up here and it continues going lower, you just happen to have a week that continued to distribute lower. They want to reach price to a lower price objective. There's something below price that they want to reach before pushing it back higher. That's why it's going to keep dropping. It's only going to keep going higher after taking out a previous daily low if they want it to, right? If there is that institutional backing or that higher time frame idea that it's going to go higher. For instance, what is occurring around here? All in this. They're sweeping what? This. That's what happened here. They're taking out the IPTA lows. They're taking out all these significant lows, and then it came back higher. Let's say it wasn't sweeping the IPTA lows, right? And it was more small range candles. So like this candle was small, but it still took out the previous daily low. And the next candle was small and took out the previous daily low without taking out these sell side liquidities. And then it kept running lower. That means there's some objective that it wants to get to. Doesn't have to, just because price came down and took out these IPTA lows does not mean it has to keep going back higher. I tell people that all the time. Come down here, may want to come back into the speed, because I was saying on the daily updates, this was the fingerprint that I saw that I like to see. It fell through so far. This fair value gap here, it fell through because it ran right through it. Instead of it coming into it and then coming back down and giving a reaction lower, it didn't do that. So hopefully that answers your question as well. How do we know the next move to take if there's a lot of 15-minute swings before London or New York? That's a great question as well. Go back on this. I'm going to clear the chart. I want to clear one of these charts. Yeah, I'll clear GU, whatever. And you said before New York or London? It's a good example. That's a good idea. I'm always picking the examples that are the most choppiest. But look at this example here. Look at the 15-minute swing highs prior to London. So we're going to mark it out. So we'll walk through it together. This is it right here. 15-minute swing highs here. 15-minute swing lows here. There's a few of them. High here. Low here. There's another one here. There's one up here that's forming. That one broke that one here. Now going into London, it all depends on your daily draw. Now we know that this day was choppy, and it's the low. No, it's not the low of the week. Oh no, it is the low of the week. It's Wednesday. It was choppy. You're waiting for it to align with your daily bias. If I wanted this market to probably go higher, I want to see some swing low be broken. The fact that these swing highs are being broken does not get me excited to buy. Because like I said, commercials are most likely buying after breaking lows. New York session. Is New York session going to break some type of 15-minute low that's going to make you want to go long? Let's look at it. There's a 15-minute low here, swing low here, 1, 2, 3, during the the London lunch session. Right, this time period between 5 a.m. to 7 a.m., that's the London lunch. That's a swing low that's swept here after taking a swing high. So it takes a swing high, then it runs through a swing low with speed. If we somehow drop down on lower time frame, so we're just going to look at this one blue line that was swept. There might be a fingerprint on the lower time frame to tell me now you have the buying opportunity in your favor. You scale down to the 1 minute. Let's go down to the break. Where's the break? Oh, it's break. It broke here. Broke here. We're trading. Fair value gap here. You see that? Let's go back to it. Here. It's the same thing with the Asian session model. The only thing it's called Asian session model because it happens in Asian session. I can make anybody could come out here and say, oh, New York session model, London session model, because within the sessions there are trade setups that you can find. Fair value gap here. That's the fingerprint. Runs through all these swing highs. So there's a shift occurring. I wait for price to trade into it, and I go long here. Yes, it's going to cut through candles. Yes, it's going to cut through the zone. But you're going to have a stop loss in here. Odds are you're probably having a stop loss of 10, 15, 20 pips. Most people are saying, I need a stop loss of 4 pips, 1 pip. You're gonna get 8 like food, man. I'm telling you, people that have these small stop losses, man, market makers are running that easy. Yes, there are times where you'll get these traders show you these trade setups where they're getting the 1 pip SL, 5 pip SL. That's once in a blue moon. I'm telling you, they're getting those once in a blue moon. They're not getting that every single trade that they take. They're not getting it to the pip like that. Yes, there are some individuals out here that can do that. But for the average trader, they're not doing that. They're not doing that. And this is GU. Let's say go long. Here. Right? Come here. Measure this out. 15 is the minimum, the minimum that I would go for the SL intraday trade. Maximum 40 pips. That's if I'm going in with stop entries or limit entries off of the Asian session. But anywhere I'm getting in intraday, most likely the minimum stop loss is anywhere from 15 to 20. But if I'm getting in with limit orders, it's going to be a 40 pip SL or 35 pip SL. It's going to be a much steeper one. And then I'm aiming for higher highs, or the previous daily high, or the previous session high, or the session's current high. See how New York session made a high here? That's buy side liquidity, man. It's right there. You don't have to take this to the moon. You don't have to. You can take it right there. But if you want, I know some people say, I want more pips. I want more of this. You could do that. Bring this down to 15 pips, and that would be the trade idea. Hopefully that answers your question. That's how this is how I would do it, at least. Will I get stopped? I could. Let me just speed it up. And faster. And there it is. Got stopped. It happens. You're not going to get it right. Not all the time. You're not going to get it right. Even though I got stopped, what happens? Price still continues in the overall trend. They're doing that on purpose. Your stop loss is just your safety net. But this whole time, What are you trying to do? You're trying to take some off above highs. Swing highs. Trying to take something off. Look at that. Price comes here. But as soon as... Look how price comes exactly to the high. And all of a sudden, it looks like it gets frightened. And it runs away. As soon as it gets to that high, zoom, it drops. Because these markets are working around the highs and lows. They're not working around support and resistance. Get that out of your head. That is nonsense. Alright, that's cool. I answered his... Yeah. Answered your questions, my G. Hopefully that was insightful for you. I know there was somebody else that said something in the chat. Don't want to leave mans hanging. Boom. Okay, we got a few questions. You got 1, 2, 3, 4 questions. Alright. Each daily candle, how you approach it to know if it will be bullish or bearish candle. It confuses me a lot. Daily draw. Daily draw. Good question. Great question, my man. Alright. So we're going to just remove this completely. And we'll go to the daily. There was a model or a flowchart that I made that was very simple for me, at least. Not to say it's the only way to get daily draw. And not to say it's the perfect way to get daily draw. But this is the first thing I like to tell people that never traded Forex ever. You know, if I had to explain this to my mom, my brother, my partner, or a homie that never traded Forex and they wanted to know where the market was going, it sounds pretty like simple, but like it's right there in front of your face sometimes. If price broke the previous daily high, it's so funny. Odds are it might keep running higher. I'm not gonna lie. You tell me, look at this chart right here in front of you, right? Trying to answer your question. If price broke the previous daily high, odds are it's gonna run higher. Now, we know eventually it's going to sell, but we know the draw is probably still the previous daily high. Look at this leg here. I want to show this for example. Look at all this leg here. Previous daily high broken on this day. And we'll use the replay tool so we can go through it together. This is a long video. Price comes up here. I'm still recording. Perfect. Whew, man. That would have been a bummer if I wasn't recording. Would have let so many people down. Price comes up here. But I'm Deontay, man. I got this. Price comes up here, takes out the previous daily high. Like I said, if it takes out the previous daily high, odds are it's probably going to keep going higher. So we know that it's probably going to draw on this high. The next candle here is going to draw on this high Friday, right? What happens the next day? It runs that high. It keeps running the highs. The lows are protected here. I'm going to make this red. My OCD kicking in. The lows are protected here. Look at how they don't want to run the lows. They don't want to run the sell side liquidity. So we found a trending market. We found a market that is trending. Now, the analogy that I'm explaining to you normally typically works when the market is trending in one direction, because we know the commercials sell after breaking a previous daily high. That's when they're going to turn the corner and change the trend. But if you catch the trending market, they're going to protect one side of liquidity. It's always, you're seeing it right in front of your eyes. They're protecting one side of the liquidity. They're protecting the sell side. They don't want to run the sell side. But if they do run the sell side, there are two things that are either occurring. It's either going to be a change in trend, or it's just a run on sell side liquidity, counter trend candle to run higher. That's it. This previous daily high here is probably going to get ran too. Doesn't, but look, small range, large range, boom, runs through that high. But it also runs through this candle's high. And the low is protected, and this low may be protected as well. But eventually, with the ideology that I'm telling you, you're going to run into a day where it doesn't work. This is just a lazy trader approach, because people want to know, oh, how do I catch daily bias? And when I look at these charts, I'm always looking at the simplest ways of trying to get into market. I'm just like, wow, the previous daily high was broken. Odds are it's probably going to keep going higher. And it's probably going to be a trending market. You see here? Look at that now. Takes out the previous daily high here. Boom. Next day, they sell off. So eventually, that ideology that I'm telling you about, it's going to fail you. I'm not telling you it's going to be the pinnacle of finding daily draw, because you're going to get it wrong. Turns around on you, right? Previous daily low was broken. Now, if you keep the ideology the same from this lazy trader approach of finding daily draw, it took the previous daily low. Odds are it's going to take this low as well. That's what it does here. You see that? Price takes that low as well. Now, if price took the previous daily low, it's going to probably take this daily low as well. But like I said, it's not going to be perfect all the time. But this is just one way I would like to gauge it. See how it takes the high here, and then it takes a low? It takes high, and then it takes a low. So eventually it's going to be conflicting. But that's one way for you to simply find the daily draw. In the most simplest form. Is the previous daily high broken? Yes. Then odds are tomorrow it's going to run higher. But odds are it might turn around on you as well. Because we see here, it takes the previous daily high. But what happens the next day? Does not take out this previous daily high. It runs lower. Change in trend. Another way I like to do this. My most favorite way. And this is just for more confirmation. We'll take it off with gold. Because I feel like gold. Yeah, gold was a good example. I think I have it on IPTA. Oops. Oh, you're not changing the chart, man. Gold. Gold. New gold was going to sell this week. Do I want to clear this and draw this up in later time? Yeah. All right. Daily bias. Let's say you had no clue or idea where price was going. And you happen to be, you come along here. Because I know you're cherry picking though, Deontay. Yes, you're going to have to wait for a couple days or even a couple weeks for you to really get the confirmation for you to be like, okay, yes, I am happy that I got the footprint or the fingerprint to tell me now the market is trending. Now I can pick a side of where the market's going. This is a swing low. This is an old high. We know the commercials like to sell after breaking highs. We see this happen. Takes the high. Make this red. And price comes down. Price comes up, comes down. Takes out the low. So it takes out high and low. Now, what does this do to retail traders? This is an outside bar. Larry Williams said in his book, there are two candles. There are specifically only two candles that forms that tricks up a lot of retail traders. This is one of them. An outside bar candle. This candle tricks a lot of traders because it took the high and the low. What I would like to do after this, I would like to wait and see what happens after this bar. After this candle, I want to see what happens. Does it take out the low again? Yes. This outside bar candle's low was broken instead of the high. So I know odds are it's going to probably keep going lower. That's just one tip for you. When you see an outside bar like this and you see the low broken, odds are it's going to keep trending lower. That's just a little tip. If it broke the high, odds are it's going to keep going higher. This swing low is what I'm really referring to. Look at this swing low here. Boom. Major. Why is this major? Because it's doing it with speed. Instantly. I'm already hooked. It got me by the reel. Commercials got me. I'm like, dang, what's going on here? Something has to be happening here. So then what I have to wait for? If it's going to be bearish, a lower swing high is going to form. This is a swing high up here. That's a swing high. That's a swing low. Need to wait. If price action is going to now be bearish, I need to wait for a lower swing high. So let's wait for that to form. I'm also showing you guys high probability scalps. There's so many models I'm showing you here in one. There goes the swing high. 1, 2, 3. At this point, your daily bias. At this point, you need to be going short every day. Done. You're going short every day. And where are you going short to? Sell side liquidity. Here. There's so many ways. You could use the algorithmic levels as well. The 50s, the 20s, the 00s. So many ways. Here. I'm not trying to make it complex. I want to make it simple for traders. Here. Right? This is all sell side liquidity. Why is this a lower swing high? What makes this a swing high? Because there's a lower high on the left and a lower high on the right. The swing point here, its low is broken, so now it's confirmed. It's confirmed. At this point, if you want to just go short, you can. If you're a riskier trader and you've been trading this and you have a lot more experience and you see the setup, I'm telling you, if you just go short here, man, you're ahead of the curve. But if you want that extra confirmation to make sure price is really going to be truly bearish and the daily bias is going to continue to go shorter, you want to see this third candle's low broken. That last candle in that swing point, that lower swing high that you have here, wait for that candle's low to get broken. That's all you need to know. At that point, once that candle is broken, boom, you're looking to go short. You're looking to go short. Your daily draw now is going to be previous daily lows. And if you ever get a case scenario where the previous daily high is broken, it's probably going to be a buy-side raid just to get retail traders to go long again, and they're going to short again while they're increasing their net shorts. That's all it is. And you're targeting previous daily lows. And you're just going to target that. You see that? Look how they run both sides again. Retail traders are confused. But what side do they run after this? The low. Looks familiar, right? Looks familiar. What did I just say about outside bar candles and Larry Williams? Outside bar, right here. If it's truly going to be bullish, after you get an outside bar, it's going to run back to the high. And it's going to continue trending higher. That was the smash day model idea, right? Especially if it closes below the last 3 to 8 previous daily lows in a discount. Here, outside bar, but its close is not below the previous daily low or the last 2 to 3 days. So it's not even feasible for a smash day setup, for those that know what I'm talking about. But look at how the outside bar, instead of its high broken, it's the low. So we're still looking for sell side liquidity. The draw is still bearish. Anytime you run the previous daily high, it's just to get retail traders on the wrong side and run their stops. Swing high. We're not going to mark out the lows, but we know that now it's daily draw. The bias is sell side. What did we run here? 1, 2, 3. In essence, this is a swing low. Is it a confirmed swing low? No. Why is it not a confirmed swing low? Because the high of the swing point isn't broken. But in theory, it is still a swing point because there's a higher low on the left and a higher low on the right. So that swing low is broken. After that swing low is broken, what do we need to see form? A lower swing high again. It's like steps going down on the daily time frame. That's a swing high right there. Once again. And it's confirmed. Why is it confirmed? Because the low is broken. 1, 2, 3. Lower high on the left, lower high on the right. Third candle's low is broken, my friend. You want to know whether or not it's going to keep going lower? You wait for the third candle again, if that's what you want to do. If you want to reset the whole ideology or the model, you reset it again, wait for the third candle to be broken, go short again for the high probability scalp. Runs that. Odds are, what are you going to run? Sell side. Why? Because you already got the institutions backing you. They don't want to take out previous daily highs. And you're making lower swing highs. And you're making lower swing lows. Another analogy. If you've been watching this video long enough, if you're still in this Zoom, shout out to you, man. Shout out to you. If you're going to watch this whole recording without skipping through it, man, shout out to you. You really want to learn. What is happening here? What cycle is this that you're observing? I know a lot of you guys probably said it already. Small range, larger range, small range. What's going to happen tomorrow? Probably a large range candle. You need to go hunting tomorrow. The candle is larger. Look at that. It is larger than this candle. What does it take? Sell side liquidity. Does close up. Yes, I know. It does close up. Does it take out the buy side? No, it does not. But it is larger than the previous candle. And what can you look at these candles as? If it's trending down, all these up close candles are simply what? Counter trend candles. So you know the bias, my friend. You know it. Takes out the high. This is just to get retail traders on the wrong side. Because we haven't did what? We haven't showed a footprint of speed to the upside. So this is all just bluff. That's them bluff. Not saying that they're bluffing like, we're gonna buy. It's just bluff. They're just doing that just to get you guys on the wrong side. And what are they gonna do? They're gonna eventually turn it around on you guys. You're gonna turn it around, and the draw is going to be previous daily low after low after low after low. Like I said before, with the lazy trader approach, it works a lot in the trending model environment. Yes, it took the high and took the low, but look at this here. When it starts to trend, when the market really starts to make its leg, it starts to get into its leg and go lower or higher, it's only going to take the lows. You see it in price action. I don't need any indicator to tell me this, man. Look at the lows. Goodbye. Protect the high. Took out that low, then this low might be the draw. Goodbye. Takes out the low. Protects the high. What happens? Takes that low. It's probably going to take this low. It does it again. Takes the low. That's your daily draw. I just explained daily draw in 2 simple ways. Hopefully you were able to understand that. Hopefully that answers your question. How to identify when New York reversal can occur? Good question. New York reversals, tricky one. I personally would say New York reversals occur when the London session is tiny. Yeah. When the London session isn't dynamic and snappy, you're going to get most likely a New York reversal. It's going to run the London high or the London low, and then it's going to turn right around. That's what's going to happen. But it needs to happen either in a premium or discount, depending on where the candle is going to draw towards. Hopefully that answers your question as well. So when you see a small Asian session, right? Or even if you see a large Asian session, right? That's larger than 40 pips or 45 pips. Ideally, I want the Asian session to be less than 35 pips. But if the Asian session is larger than 40 pips, and I know you're going to sit here and want me to show you an example. So let's get the examples going. 15 minutes. Let's go back. Look at this. This is a perfect one. Wherever we are here. Asian session is large. It's 98 pips. Nearly rounded. Let's just say it's 100 pips. Just for numbers wise. It's 100 pips. You shouldn't be trading London. That's the one sole reason why you should be avoiding this. Because the algorithm has already completed most of its average daily pip range in Asian session. It's 93 pips already. It's basically almost 100 pips for the daily range. Right? London is not going to give you much. But New York may. New York may give you the reversal. That's how I find the New York reversals typically. When I get the Asian session that is not choppy and trendy, if the characteristics of Asian session is to be in consolidation and it's not consolidating and it's just trending up higher and lower and it's larger than 45 pips, odds are London session is going to move sideways. Let's say hypothetically that's Sunday's Asian session, right? Look at that. That green box zone that's not shaded perfectly on the candles. That's how I know that's Sunday based off of this indicator. That's Sunday's Asian session, hypothetically. Look, I can already tell it's small in pip range compared to this. Look at how clean London moves. See how clean that moves? No New York reversal. And everybody thinks they need an indicator to figure this stuff out. Price action is telling them. Once again, Asian session is tiny. Less than 45 pips, less than 40 pips, less than 35 pips. Very ideal. This is a nice Asian session. Because it's small. It's building in sentiment. It's getting retail traders thinking, okay, breakout on the upside or breakout on the downside. I like those days. I like to see the Asian session like that. I know I'm going to have a good probability of finding a good setup in London. It's going to move and give me probably a clean AMD setup or clean Judas swing. And as you can see, London comes down, makes the low of the day, comes back up. New York doesn't get any higher. It's still a choppy sideways day. Look at another example. You can find an example for you, my friend. This one is larger than 45 pips here. You could basically round this to 50 pips if you wanted to. I would ideally jump right out of this. Right? New York would probably give you a better setup. New York's still choppy in itself, but still follows key principles. Runs what? 15-minute swing high, then drops. There you go. Go up here. Too small. So there are times where the Asian session is too small. The minimum requirement needs to be 20 pips for me to trade London. If it's less than 20 pips, not feasible. Don't even look at London. Don't even try and force a setup. If you want to, you can. You could be a winner. Not saying every time. But if you're a professional trader and you follow a professional strategic guideline, you have filters that you must not break. You have a code. You can't break that code. Price breaks this swing. Price breaks this swing high. Price breaks this high. Comes up, and then comes down. Then runs higher. I think somebody's home. Give me 1 second. I had to let my pops in. My bad, y'all. Family first. Okay. Asian session high. Broken first. And this is another concept here. Look at how they break the high first and the low first. The overall day is still going higher. The first break is normally going to be your first initial move. It's not going to be perfect all the time. But normally when I see both sides broken, I like to go with the first side broken. Especially if the daily bias is in trend. Look at this here too. Greater than 20 pips, less than 45 pips. Ideal. Look at the Judas swing. Wow, back to back. You can see, wow, these are back to back examples. Broke the Asian session high first, then broke the Asian session low. It's truly trying to go higher. Look at New York session with a cannon. What a rocket ship. But like I said, your New York reversals are normally going to form when you have a large Asian session. If the Asian session is not consolidating, give you clear consolidation like this, even though it's less than 20, like this, right? Even though it trends up, it still consolidates throughout the last couple hours, right? From 9 all the way up to 12 consolidates. It's going to be an ideal London setup. But if it doesn't do that, you're going to get this. Choppy. Look how London does nothing for people. Everybody's getting in London session is like, yo, it's time for London. Does nothing. Go get your sleep. Go rest. Go set an alarm for 7 a.m. Go set an alarm for 8:20 GME Open, 8:30 CME Open, whatever you want to set it off, news embargo lift. Set an alarm for that, then trade. And that's how I would do that. Last question, man. How you approach each day. What you draw out. The time frame you check. Is it from daily, 4 hour, 1 hour, 5 minute? I really want to know the top down analysis. We only check the daily, then drop down to the 5 minute. Thank you so much. My pleasure. Day in, day out, man. Daily time frame is my best friend. This is why exactly I go straight to IPTA. Daily time frame is normally going to tell me my most recent draw on liquidity. Is it going to take off the previous daily high or the previous daily low? Boom. That's the first question I ask myself before the new trading day. Ask myself that every day. Previous daily high, previous daily low. Okay, cool. If it's going to take out the previous daily high, I need to then drop down on the lower time frame. Normally, I'm not looking at the 4 hour, personally. That's just my take on it. I'm personally not dropping down on the 4 hour. I'm not personally dropping down to the 8 hour. I'm personally either dropping down to 30 minute, 15, 5, 3, and 1 minute. Done. Because I know what side the institutional sponsorship is going to be on. If I'm looking for the previous daily high to be broken, there's going to be a buy setup below midnight opening price. And odds are I need it to also be below Sunday's opening price or the weekly open. Vice versa. If I'm looking for the draw to be to the previous daily low, I need price to come above the weekly opening price and midnight opening price. And then I sell short. And normally those sell-ups are either coming in by London or New York setup. And I'm holding all the way through London close. I'm holding into the next couple days. Because people want to make large pips, you need to hold. In order for you to make those larger pips, from here, short, let's say you went short here as soon as it hit the fair value gap. Here, scoot this over on this day here. So February 7th, you would have to have a stop loss, something like this, or above a previous daily high. It doesn't have to be the swing high, but it has to be some previous daily high. Because we know that if it's going to go short, like I said, the buy side liquidity is most likely going to be protected. And odds are you want to be on the favor where they're not going to run that buy side liquidity. And then you hold for lower prices. That's how I like to do it. And then you'll see how price ticked all the way down here for the month of February. And now we're in March. And then March did what? March started pulling back up. And play that out. March started pulling back up with speed. So if you get another candle here, a daily candle that opens up here and then runs higher, then we left what? Speed, breaking a swing high, balanced price range, BPR. So could price come back up here? Yes, it can. It definitely can. So hopefully that was insightful. Jeez, it's 10:40 p.m. here. It's Friday, man. We did it, man. Shout out to everybody that joined. Shout out to everybody that's going to watch it on YouTube. Shout out to everybody that's going to watch this whole thing from start to finish, because there's a lot of gems. There's a lot of things I'm talking about in here. I won't stop doing this. This is my lifestyle. I do this. Not like these other people that do it for monetization. Yeah, I cracked myself up. Not like, I'm not even going to call no names because I don't want to throw shots and cause problems. But not for the people that be doing stuff for monetization and don't really trade and provide signal services for people that are literally trash and garbage. We're going to soon expose those people. Don't even worry. We got a lot of things coming to this channel. Man, it's your boy Deontay signing out. It's been a pleasure. Peace. I want to make sure everybody in the chat has been... no problem, man. No problem. Much appreciated, guys. Shout out to Kimberly as well for sponsoring this Zoom. Without Kimberly, we wouldn't have this unlimited Zoom right now. She sponsored it, so shout out to Kimberly. Peace, man. Peace.